Hey guys, we're getting started in about 2 minutes, so please take your seats. And we're also testing the mic for the live stream. So if you have friends here or friends who are not here who would be interested, feel free to tweet them, email them, post on your Facebook page, Instagram, whatever.
Transition the slides after?
Yeah, we're gonna have to figure that out. I don't know. I guess we press escape on this or something?
Or do we just press the arrow?
I don't know. We're gonna have to figure it out. We'll just figure it out after we intro Charlie. Okay, ready?
Yeah. Hey! All y'all ready?
Okay.
All right, awesome. So welcome everyone. Thank you for joining us today. My name is Jing. I'm the president of the Wellesley Bitcoin Club.
And I'm Jonathan, president of the MIT Bitcoin Club. Last year was our first annual Bitcoin Expo. We had an amazing lineup of speakers, over 500 attendees, and we had the launch of the MIT Bitcoin project. This year, we're taking it to the next level.
So what's different this year? Well, we have double the awesomeness because we have 2 days full of super awesome speakers if you've seen our lineup. And we're trying to get a little bit more academic this year so we can delve deeper into the heart of cryptocurrency. So opening our event today, and is also an MIT alum. So please join me in welcoming Charlie Lee.
Okay. Do you know how to use this stuff? We need to, okay. Where's the button to get it going? Okay. What's that? Is that working? God. Okay.
Yeah, it's working.
Okay. You good from here? Yeah. Okay, awesome.
Hey, I am extremely honored to be here. So a couple months ago when Jing wrote me an email asking me whether or not I'm interested in keynoting the MIT Bitcoin Expo, my first thought was like, hell yeah. It's been a while since I've been back to MIT. Yeah, I got extremely excited when I found out the expo is at 26100. This is one of my favorite classrooms. I remember this is like almost 20 years ago when I first took a class in this classroom, 1802, with Professor Rogers. Yeah, and I remember trying not to fall asleep in his class. I hope I'm not as boring as he was back then. And another thing I remember about this classroom is I watched a lot of LSE movies. Does that still happen? Yeah, does LSE still suck? Yeah, and I definitely did not expect back then to actually come back here and give a talk here, so I'm extremely honored, like I said. So a little bit about me. I graduated in 1999-2000 with a bachelor's and MEng in Core 6.3, which is computer science. Then I went to the Silicon Valley. I worked at Google for 6 years on various projects, including YouTube, Chrome OS, Google Play Games. And back in 2011, I found out about Bitcoin, and later that year, I created Litecoin, an open source fork of Bitcoin. And in 2013, I wanted to kind of go all in with cryptocurrency. So I talked to Coinbase. I basically told them, I graduated from MIT, I'm working at Google, I created Litecoin, give me a job. And I guess they did, and the rest is history. So a little bit about my experience with cryptography. I actually took 6046 here with Professor Ron Rivest, who is the RNRSA. And 6046 is actually just algorithms. It's pretty boring stuff, search algorithms and everything, but Professor Rivest will every now and then go into a tangent and talk about cryptography, which is a lot more exciting to me than search algorithms. And my other experience with cryptography is I started a company at MIT doing encrypted instant messaging. This was like 15 years before Telegram. And back then, I think people didn't really appreciate encryption as much. They didn't care if people snooped on their instant messages like they do today. So the company didn't really take off. But what I did learn was we implemented blowfish symmetric encryption for encrypting private instant messages between users. And we did it on C++ and Java. We encrypted both the encryption, we implemented both the encryption and decryption, and that was pretty hard. And I think back then there weren't a lot of crypto libraries out there, so we didn't use any. Plus we're a bunch of MIT nerds. If you can write it yourself, why use someone else's code, right? So yeah, so that's hence the sad blowfish you see there. And then I, at MIT, also learned about economics. Right? I took 1402, macroeconomics, learned about monetary policy, try to question why it's so much like a game. If you tweak a dial here, change the numbers there, you can all of a sudden magic is keep interest rate at 0, do some quantitative easing, and voila, economy is back. And then I also learned about fractional reserve banking, where money is actually gets created from debt. So if I deposit $1 into my bank account, the banks can create $9 out of thin air, right? I have 3 little letters for that, WTF. So there's got to be something better, right? So one thing I've experienced that I found out at MIT was gold, right? I have the MIT brass rat here. I bought it for $300. And I thought at that time that was extremely expensive. Why was gold so expensive? And I hear these days the MIT brass rat is actually like $1,000. That is ridiculous for something made out of brass. And then I also found out that gold is being manipulated. Right? There's reasons to push the gold price down because high gold price means the dollar is weak. So, and the government might not even hold the gold that it claims it holds. And then to audit the Fed bill. I mean, this is the Federal Reserve, which sounds like a federal institution, but it's actually a private corporation controlling our money supply and doing monetary policy, and we can't even do it's Bitcoin. You guys are all here because of Bitcoin. So yeah, you all know Bitcoin is open source, rules enforced by the code, it's decentralized, fixed production, total of 21 million coins, has low fees, and it's borderless, right? So when I first found out about Bitcoin, I realized that what struck me is that it's actually the best form of money. It's better than gold, it's better than dollar. It's better than anything else we've ever had in our entire history. So to realize why it's actually the best form of money, we actually have to ask ourselves, what is money? Right? So money can be defined by a few properties. Right? Money has to be divisible. If I spend $10 at a store to buy a pack of gum, I have to get some change back, right? There has to be a way to divide money into smaller pieces so it can be used properly. It has to be transportable. I have to be able to bring my money all over the place. Like a cow is not a good form of money because it's hard to bring it all over the place. It has to be scarce. If you can print as much money as you want, or if you can find money lying around on the floor, then it's not really a good form of money. It has to be fungible. What that means is if you get $1, it doesn't matter which dollar you get, it's still worth $1. It has to be durable, it has to last, and lastly, it has to be non-consumable. It can't rot. Like egg is not good money, fruit is not good money, and something that you can eat obviously is not good money. So seashells, is that good money? Seashells has actually been used as currency in our history. So it's not divisible, it's barely transportable, it's not scarce, it's not fungible, it's not durable, and the only thing good about seashells is you can't eat it and it doesn't go bad. So next we have gold, right? Gold has been used as money throughout our whole history, until recently actually. So gold is transportable. Oh, it's not divisible. It's hard to cut gold into little pieces. It's fairly transportable, except it's kind of heavy. It's scarce, which is good. It's mostly fungible, except there's fake gold coins and fake gold bars. So if you get a gold coin, you're not totally sure if it's real. So that's why it's mostly fungible. It's very durable. It's non-consumable. So it's actually pretty good money. Next, we have the dollar, right? Fiat currency. Fiat currency is fairly divisible. You have like coins. You can get change. It's very transportable. It's obviously not scarce. And it's fairly fungible, but there's counterfeit currency. So if you get $100, you have to check to see if it's fake. And if it's fake, then it's not really worth $100. It's very durable. It's non-consumable. And lastly, we have Bitcoin, right? Bitcoin is the best form of money because it's divisible up to 1 Satoshi. It's very transportable. If you bring Bitcoin, like right now, if you want to bring cash on a flight, you have to declare it. But if you bring Bitcoin in your brain wallet, no one really knows how much money you actually brought. You can send Bitcoin to someone overseas very easily. You can't do that with any other currency as easily. It's scarce. There's only 21 million total. It's fairly fungible. If you get a Bitcoin, it's as good as any other Bitcoin. But because Bitcoin has history attached to it, some people are saying like if you use stolen Bitcoin, you shouldn't be allowed. I don't really believe that. I think we shouldn't care about the history. But the fact that there is history tied to it, it makes it less fungible. And it's durable and it's non-consumable. So as you can see from this chart, Bitcoin, I believe, is the best form of money we have. So once I realized that, what did I do? I immediately went out to buy some Bitcoins. So it's interesting. The first time I bought Bitcoins, I bought it from Mike Hearn. You guys probably all know who he is, core developer. So he was at Google at the same time, and he was a big proponent of Bitcoin. So I sent him $1,000 over PayPal, and he sent me some Bitcoins. And I bought it at an extremely high price of $30 of Bitcoin. It's extremely high because right after I bought it, it dropped to 20. And then 3 months later, it dropped to 10 after Mt. Gox hack. And then a year later, it was at $2. So, and that drop from 30 to 2 is worse than what we have today. We only dropped from 1,200 to 200. So, and what did I do? Did I panic sell? No, I didn't panic sell because the fundamentals of Bitcoin hasn't changed over that time period, right? It's still the best form of money, just that people didn't realize it. So if you realize something before other people do, then you can make money from it. And I didn't lose faith, and I bought more Bitcoins. So in late 2011, I decided that I want to play around with the Bitcoin code and I want to create an alternative currency. So this is when I created Litecoin. So what I tried to do was I wanted to create silver to Bitcoin's gold. So things, right? So one thing I did is make sure I found a memorable name. Bitcoin is an awesome name, and I think Litecoin is pretty good too. I created more coins, so there's a little bit more coins, and what's important is also faster. So the transactions are 4 times faster than Bitcoin. And lastly, I think this is the most important, I made it CPU mined. So the reason why that was important is in order for altcoin to survive, it can't really compete with Bitcoin in terms of miners. So it has to have its own mining base to support the coin. I've seen countless examples of coins that was competing with Bitcoin that failed because miners would jump between that coin and Bitcoin will always win out. And this is also happening in the script space, right? Coins just can't compete with Litecoin. So these days, over time, Bitcoin became, when Bitcoin was GPU mined, Litecoin was CPU mined. When Bitcoin became ASIC mined, Litecoin became GPU mined. So pretty much at no point in history was Litecoin ever competing with Bitcoin for miners. And now Litecoin is ASIC mined. So I get asked this a lot. So now that Litecoin is no longer a CPU coin, why is it existing? Why is it still valuable? So I like to explain that with an analogy. What you see here is Dragonstone Castle from Game of Thrones. Bitcoin network is like a castle, right? It has high security. It's really protected by the mining hash rate. Attacking it is next to impossible. So because of King Satoshi's decision to subsidize mining, the protection is actually paid for by mining rewards today. So mining fees can be pretty low. And plus, not many people are using Bitcoin in the grand scheme of things. So the number of transactions is not that much. So everything, or in this case, everybody can be protected by this castle because there's room for it and it's low cost. So can this last? It can't really last, right? Mining rewards will asymptotically approach 0. So then what would happen is the fees would have to be increased. Once it's not free to be protected in this castle anymore, the poor people cannot afford the protection, and they would have to be outside or do something else. And this is where Litecoin can actually fill this role. So Litecoin is not as spectacular as a Bitcoin castle, but it provides some protection and it's cheap, right? And kids love it. The idea is that if you're buying a house or a car, or if you're doing like interbank settlement, you want the protection of the Bitcoin network. So you're willing to pay the higher fees to be on the Bitcoin blockchain. But if you're just buying coffee or you're just buying a meal, you can't afford, like the fees will be too high for the Bitcoin network. So you would actually be doing it off blockchain or an alternate secure network like Litecoin. So the reason that is like Bitcoin's endgame will be where fees will pay for the network, right? So why would anyone mine Bitcoin unless they're getting paid enough? So someone has to pay for the cost of decentralization. So the transactions have to pay for it, right? The transaction fees. But mining like a high value transaction versus a low value transaction costs the same. It puts the same amount of burden on the Bitcoin network. So fees will have to be increased to so that it makes sense. So low value transactions will kind of be spammy transactions on the Bitcoin network, and they will be pushed out. Yeah, so that's what I think would happen. I think it's going to take many years for us to see this reality, because right now the fees are still too low. Fees are still low. Everyone can still use the go-to alternative cryptocurrency in the future. So if you hold any Litecoin, hang on for a wild ride. But what I know today is that if you have Litecoins today, you can actually spend it. This is my purchase for my ticket to this conference. A couple months ago, I went on Cheap Air. They accept Bitcoin, Litecoin, and Dogecoin, and I paid for my ticket using Litecoin. So think about that. I pay for my flight using a currency that I created 3.5 years ago. So why is Bitcoin exciting? I think people talk about how it's analogous to the internet, right? The way I think about it is before internet, information is restricted, right? You can either get your news from newspaper or TV, and pretty much that's it. So after the internet, now everything is decentralized. You can get information from Twitter, from blog posts, from all these other news sources, and that really that's really powerful. And Bitcoin is the same. Before Bitcoin, money is controlled by the government. There's all these checkpoints that restrict flow of money. For example, a few years ago, the government cracked down on internet poker, right? So all they had to do was to talk to Visa, MasterCard, and all the banks and say, do not allow any payments to go through your network to these sites. And just like that, people can't deposit dollars into Bitcoin sites and withdraw them. So poker became really hard for anyone to use. And I think that's just wrong, right? It's your money. Why should the government be able to tell you what you can or cannot do with your money, especially when it's something like poker where you're not harming anyone? So, and Bitcoin solves that, right? The government can't really shut down Bitcoin. They can't prevent you from sending Bitcoin to a Bitcoin poker site. And recently they took down Silk Road, right? And after they took down Silk Road, like 10 other Silk Road sites came up. And now the whole underground Silk Road kind of sites is like 10 times bigger than what it was a year ago when they took down Silk Road. So this quote from Rothschild makes a lot of sense. If you give me control of the nation's money supply, and I care not who writes the laws, right? Controlling money is really powerful. And for the nerds among us, an equivalent quote is this one from Dune. He who controls the spice controls the universe. So I think that's extremely exciting about Bitcoin. Bitcoin is going to revolutionize money. The last thing I want to say about Bitcoin, what's exciting about Bitcoin is, you can't see there, but it says programmable money. So right now, everything is programmable. I have a Nest thermostat at home. When I go home, I turn off my home alarm, and it tells my Nest thermostat that I'm home, and my Nest thermostat will turn on and set to the temperature that I like. And that's really powerful. And what Bitcoin provides is the ability to program spending money. Right? Like you can imagine you can deliver it straight to your house. Or if you have autonomous cars that can, once you're done with it, it will just go find parking itself and pay for parking. And lastly, Bitcoin really makes it possible to have autonomous agents. Can you imagine having AI that can pay for its own server space, pay for its own storage, and pay for upgrades to computing resources, right? And one thing the AI can also do is it can actually pay people to do work for it. There's Amazon's Mechanical Turk, right, that lets you pay to have people do work, right? So imagine if the Mechanical Turk accepts Bitcoin, then you can have AI making people do work for it. And that is really powerful. So I'll leave you guys with that thought. The possibilities are endless, what you can do with Bitcoin and what Bitcoin can achieve, right? And it's up to us, whether you're a cryptographer, a programmer, an economist, or just a Bitcoin enthusiast, right? What Bitcoin can do is it's limited by our imagination. So I'd say go out there and create the next amazing Bitcoin thing. Thank you. Have some time for questions? Yeah. Do you guys have to use a mic up there?
Yeah, that's standing by service.
Good. The question is, do I think there's ways to stop the fees from going higher? I don't think so, because it's kind of the way it is. Like, decentralization costs more than a centralized system. So, so yeah, I think fees will have to go up. I mean, there's only so much you can increase the block size by, because up to a certain point, everyone is just doing a lot of work for very little money. So the economics have to make sense. So the fees will have to go up. It's not that related to the difficulty for miners. Yeah, so the difficulty for miners is controlled by how many people are mining the coin. So if it's not worth it for people to mine, then there will be less miners. So difficulty will go down. But yeah.
Wait.
Centralized mining operations evolving?
Sorry, can you say that again?
Do you see any possibility of centralized mining operations evolving?
What do you mean by centralized mining operations?
Well, somebody who basically invests massive amounts of money into computing power to run, giant mining fields that become analogous to like kind of centralized server.
I mean, mining is pretty centralized these days already, right? There's a lot of big miners. But the beauty is that you can still have a lot. It won't be centralized to like one or just a few. There can still be a lot of different miners. But yeah, it's getting more centralized.
You don't see that a trend evolving towards like having like Google, Apple, Amazon style collections of miners,
It's possible, but as long as the Google, Apples don't attack the network, I think that's fine. And there's no incentives for them to attack the network.
Thank you.
For your definition of money, I noticed you didn't include the stability of value, and it seems like a lot of other economists I've seen that define money included stability. I was wondering why you didn't include that one.
Bitcoin is so volatile is because no one really knows where Bitcoin is going to go. It could go to zero. It could be deemed illegal and no one uses it, or it could become the next reserve currency and replace the dollar. Right? Because the future is so uncertain, that's why it's so volatile. The future for US dollar is not that uncertain, so that's why it's not volatile. Right? So it's basically, it doesn't define the money that we're talking about. It's just how people value that money. Right?
Thank you.
Hi. Other than the first mover advantage you seem to have from the alternative to Bitcoin cryptocurrency market, how would you, having watched all this stuff go on now for a couple of years, how would you characterize, your advantages over the whole plethora of alternatives at this point?
The first mover advantage is big, right? It's also big for Bitcoin. So that's one of the reasons why Litecoin is still the most popular one. It's on all the exchanges. It's easy to get money in and out. Volumes on exchanges is really high. So it's hard to overcome that. And I think Litecoin has played a huge role with Bitcoin because being able to trade in and out of Bitcoin and Litecoin is really easy, right? To have trading with dollar, like moving dollars around is hard, but moving crypto around is easy. So there's a lot of arbitrage between Bitcoin and Litecoin. And I think that's played a really big role on why Litecoin has succeeded. Yeah, I think I have time for one more question.
Litecoin a little bit better, but do you think the confirmation time interval is an issue for the futures of these coins?
Do I think the confirmation time will be what?
Will be an obstacle to be accepted by the whole society. I think the confirmation time is too long for instantly.
Oh, yeah. So yeah, the one reason why I changed Litecoin to be faster is I think the 10-minute time decided by Satoshi was fairly random. He just put something out there. So it's hard to say what the optimal time is for a first confirmation. I think it's closer to Litecoin's 2.5 minutes because once you get down to like really fast confirmation, it gets really wasteful. But for like merchant payments, I think zero confirmation still works. There's going to be solutions where you have like trusted green address payments. So we'll have to figure out different ways to do zero confirmation, or before a confirmation actually happens, to decide when a payment is trustworthy. But so the confirmation time doesn't matter that much in the grand scheme of things. But if you're doing, like I've bought and sold Bitcoin and Litecoin in person, and waiting for, you can't really trust that other person, so you have to wait for one confirmation. And waiting for one confirmation with Bitcoin sometimes takes over like an hour, right, in rare cases. And sitting there, like facing this other person that you don't know whether or not he's trying to scam you for an hour is just not fun. With Litecoin, the most I've actually done was like 10 minutes, right? And that's much more bearable. So that's why I like Litecoin over Bitcoin. Okay, thank you.
Thanks, Charlie. I'd say that paying with your own currency is pretty epic. So let's have another round of applause for Charlie. Just two quick items of business before we move on to our next talk. One is that the Twitter handle for the event is, or the hashtag is MITBTC15, short, concise. And also, if you're asking a question, please make sure you have a mic and that you are speaking into the mic so everyone knows what's up.
All right, for our next speaker, we have...
So I may make this a bit difficult for the camera because I hate standing behind a podium. You're going to have to be on a swivel here. I usually start my question with that. And in most audiences, that gives me an accurate representation. But you went and gave Bitcoin to every undergraduate, and you ruined my polling ability. All right, how many people understand how mining works? Wow. Okay, so what I want to talk about today is mining. This is the MIT Bitcoin Expo, not the MIT Blockchain Expo, which is really interesting because I go to conferences all the time, and lately I'm going to conferences that are blockchain conferences, not Bitcoin conferences. And here's the reason why. That was my reaction when I first came across Bitcoin, pretty much, until I read the white paper. But the media continued with this story. Bitcoin, it's just silliness, you know, this isn't going to work. It's obviously not going to work. Not working 1 year, not working 2 years, not working 3 years, not working 4 years, the story becomes less and less tenable, right? You keep announcing that Bitcoin is dead, only to be proven wrong 3 months later and be ridiculed by sites like Bitcoin Obituaries. If you're a journalist, that starts to hurt, so you have to change your song. So we went from Bitcoin is bullshit to, well, listen, the currency is bullshit, but this blockchain technology might be interesting, right? It's in a, less decentralized fashion, put the Federal Reserve in charge of it, gave all the mining to Visa, maybe we'd have something interesting, Give the blockchain technology to Oracle, they'll build something cool with it. And so they're triangulating. And this is a fundamental failure of understanding of what the blockchain is. Because the blockchain without Bitcoin doesn't work. Bitcoin without the blockchain doesn't work, but the blockchain doesn't work without Bitcoin. The blockchain and the technology behind Bitcoin is based on a very careful balance of game theory that creates conditions whereby participants in the network compete to solve a mathematical problem and get reward for it. In competing, and through this arms race, they've escalated this competition to a point of using massive rows of hardware in giant warehouses that consume megawatts of electricity, meaning that they're spending real money, as the journalists call it, to pay the electricity bills in order to make Bitcoin, right? And this isn't some kind of side effect. This is not a appendage to the system. This is not some kind of weird fascination or get-rich-quick scheme. This is the entire basis of the security mechanism. you need a competition. The competition needs to pit the possibility of having honest players working against dishonest players, with a majority being honest. You enforce that by forcing the rules of consensus, and you do that only if you give reward. Now, what happens if that reward is not valuable? Nobody needs to do it anymore, right? Why would anyone spend real electricity to do it? What happens if the cost of mining is not expensive? What if you didn't need electricity? What if you could make mining more efficient so you're not wasting money securing the network? Well, then the cost of attacking the network drops. So you can now attack the network without expending any money. And therefore, there's no incentive to work honestly. The whole point of this is a careful balance. And the balance is this. I'm going to go out and I'm going to invest in a load of hardware. I'm going to hook that hardware up to a megawatt incoming power source, and I'm going to spend 90% of my profits on paying for that electricity bill. Meaning that if I mess up and I don't follow the rules of consensus and I don't play honestly as defined by the rules of consensus, I will not get reward. And I will still have to pay that electricity bill, and suddenly this is going to cost me a lot of money, which makes it very, very dangerous to play against the rules of consensus. You might win in the short term, but in the long term, what you're doing is you're burning a very good investment. If you put all of the money into hashing in order to attack the Bitcoin network, once you've built it all and you turn it on, you then suddenly realize, hey, I could attack the Bitcoin network, or I could make myself some Bitcoin and earn that reward. And the game theory makes sure that every time you make that thought, you come out on the side of playing the game by the rules of consensus, because it's more profitable to make Bitcoin than it is to attack the network if you have the hashing power. You can't make cheap mining. Cheap mining means that there is no risk. And without risk, why do you have reward? You can't make mining that doesn't reward, because without reward, why would you take the risk? And you can't have a blockchain without this careful balance between risk and reward. There is no blockchain without a valuable currency unit. Here's the thing though. Right now, Bitcoin is a featherweight currency. In international terms, at a global valuation of just over $3 billion, Bitcoin is a toddler, right? There are many corporations that have more money. There are lots of countries that have more money. And so by comparison, Bitcoin doesn't really compete as a national currency. However, Bitcoin is currently running a global level security infrastructure, which means that Bitcoin is resistant to international class computing attacks against it. We have bought a world-class security infrastructure to run a featherweight class currency. Does that look inefficient? Yeah, at this point it really does. Because we're securing against attacks by nation states, by conglomerates of nation states, and by multinationals, and Bitcoin can currently resist those attacks effectively. Bitcoin is not alive because no one's trying to kill it. Bitcoin is alive despite the fact that it is being relentlessly attacked every day, every minute of every hour. And it's alive because the arms race created by the incentive structure of mining has escalated to a point of delivering world-class, international class security for what is still a featherweight currency. And if you look at it at this point, you say, well, it's kind of expensive. It's a pretty expensive security infrastructure to be running for a $2 billion currency. That assumes that the currency won't grow. And that's another fundamental misunderstanding, which is that mining has to scale as the adoption of the currency scales. It doesn't. We already have world-class security from the mining. We don't need a single petahash more mining than we have now to scale Bitcoin to $100 billion, to scale Bitcoin to $1 trillion. We could run $1 trillion Bitcoin network on the amount of security that we have with some 400 petahashes of mining that we have right now. I don't remember the exact number. So what we've done is we've bought ourselves a really, really big vault, and it was expensive. And we opened that giant warehouse-sized vault, and we parked a tricycle in it, a kid's tricycle. And, you know, one day that vault can hold 100 Ferraris, and right now it's holding a tricycle, and it looks kind of silly, but that's okay, because we can grow into it. And this is a really important thing that people don't understand, because when we grow into it, then Bitcoin is not inefficient. If the world-class security mechanism is supporting a world-scale currency, or even a national-scale currency, in the order of 100 billion, or 200 billion, or perhaps $500 billion, suddenly, Bitcoin is the most efficient payment network and low-cost currency that has ever been built by man. Suddenly, it is the most eco-friendly currency on the planet. Its carbon footprint on a per-transaction basis, vis-a-vis the economic activity that it enables, is minuscule. Right now, it's not. But the beauty about this is that Bitcoin is two completely independent economic systems with only one link, which is price. Bitcoin is an economic system in elastic fashion. So, for those who don't understand how mining works, I'm going to give you a quick analogy just to explain some of the key concepts in mining, specifically the concept of difficulty and adaptive difficulty algorithms. Now, when we say that people are in this competition to solve a problem, and this problem gets more difficult or less difficult, for most people this is hard to understand. In fact, if you're trying to introduce Bitcoin to someone, the first thing you must not say is, this is a math-based currency. Because most people will go, oh, math, oh crap, I suck at math. What, do I have to solve differential equations to pay for coffee? This is terrible. Who designed this? This is ridiculous. It was probably someone at MIT. And I suck at math too, so that would be my reaction. But an easier analogy, and I looked for a long time to try to find an analogy that people could understand. So how many people here are familiar with Sudoku? Oh, good. So that's even more people than mining. We're on a good start here. All right, so Sudoku. Sudoku is interesting because, first of all, it has some very strong analogies to Bitcoin mining. First of all, it's an asymmetric algorithm. That means it's a lot easier to verify than it is to solve. Let me give you an example. I show you a completed Sudoku. At a glance, or with just a few seconds, you can say, oh, yeah, this is correct. This has been solved correctly. You can run a quick check across the rows and say this is correct. Now I give you one that's partially full, not so easy. Now you have to figure out which numbers go where. It's a lot harder to do. Guess what happens when I start scaling that problem up? Now I take that 10-row, 10-column Sudoku and I turn it into a 100-row, 100-column Sudoku. I show it to you when it's full and completed. It'll still take you only about 5 seconds to confirm. You'll just scan the rows and go, yep, all right, that looks good. So the effort you put in verification hasn't dramatically changed. It's gone up linearly. Try solving it. The difficulty in solving that Sudoku has actually increased at an exponential rate. It's gotten a lot harder to solve when you have 100 rows and 100 columns. Now it's going to take you some time. So we fill this room with Sudoku solvers. And I give $100 to the first person who solves a Sudoku. And just before we start, I put a list of numbers on the screen and I say, you fill these in these parts of your Sudoku puzzle that's empty. Start your engine. First person to find the solution gets $100. And as soon as you find one, you just go, oh, Sudoku, I got one. And I give you $100. Takes you about 10 minutes. People think, oh, this is a pretty good deal. Let me call my friends down at the MIT dorms and bring them in, and we're going to make a Sudoku cooperative, a pool, let's call it, and it takes you 8 minutes. You keep doing that. After 10 puzzles solved at 8 minutes, I say, okay, hang on a second. This is going too fast. I'm going to increase the rows and columns by 20%, and now I'm going to make it harder for you. So because you bust in a bunch of people and made it easier, I'm going to make the puzzle harder. Let's all agree that if it takes 8 minutes instead of 10, we add 20% more columns. And we keep doing that. And what we can create is an environment where no matter how many people in this auditorium are solving Sudoku, it always takes 10 minutes. If it takes a bit longer, we make it easier. If it takes a bit less time, we make it harder. And that's Bitcoin mining. That really is, in its essence, Bitcoin mining. Now, the numbers you put into the empty Sudoku are the transactions of other people. And when you show one that's solved, everyone can verify it, because they can see the transactions of other people, and those are real, and you filled in the rest of the numbers, which tells me you did some work. You had to do some work. There's no way you just came up with those numbers. It's hard to do, right? If you have to fill in 100-row Sudoku, I know it's going to take you some time. So what you did is you just proved that you did work. The Sudoku itself, a solved Sudoku, upon presentation, implies proof of work. It shows that you have done the work, as long as the initial input is something that I choose, or something random. And that's proof of work. So mining is exactly this. And it started off with Satoshi and one or two other people doing it on their laptops. And today, it's rows upon rows of machines in China on subsidized coal power plants and geothermal in Iceland and God knows where else. Now, the beauty of this is that how difficult it is to solve Bitcoin, or how many miners there are in the space, has nothing to do with how many transactions are being consumed or produced. It has nothing to do with how much money is on the Bitcoin network. All it has to do is whether it's profitable or not to continue mining. And I can tell you whether it's profitable or not. People sometimes say, you'll read this in media reports, they'll say, well, mining is not going to be profitable when X happens. Well, I can tell you mining will always be profitable. And the reason I know this is because this simple feedback loop results in what in economics is known as a perfect market. The difficulty calibration fixes the supply according to the demand on a 2-week schedule. And when supply consistently meets demand and they move in lockstep, economics teaches us that participation in that market will deliver only marginal profits over a long period of time for the most efficient operators. It will drive you to highest efficiency in a brutally competitive market. So Satoshi didn't just invent a new currency. Satoshi gave us the world's first perfect market, which is quite stunning as an achievement. There is no other market that has a tight feedback loop based on 2016 events, blocks, every 2 weeks, calibrating supply and adjusting price automatically across a global network that is completely decentralized, that is now supporting an industrial economy running at the rate of 3,600 Bitcoin a day. This is absolutely stunning. And this simple, perfect market grew from nothing to a world-class security mechanism in just 5 years. So next time somebody tells you, yeah, I like the blockchain technology, but that Bitcoin currency is kind of silly. Or, I like blockchain technology, but could we do it without mining? Or, I like mining, but could we make it more efficient and not use up so much electricity? Or, I like mining, but could we do it without reward? Understand that they don't understand the basic economic principles of the mining market. Without risk, there is no reward. Without reward, there is no risk. And without the careful balance between risk and reward, there is no security for the blockchain. And therefore, the blockchain doesn't work, and its currency is valueless. People who tell you that they want the blockchain without Bitcoin are people who would say, we like the light bulb, but can you do it without this electricity thing? because it seems like a big hassle to go deploy all this stuff. Can't we just do it with kerosene? And really what they're thinking of is a kerosene lamp. And we've already done that. I really like this automobile invention, but we don't have any gas station, and it sounds like a real hassle to dig that stuff out of the ground and distribute it in massive international networks. Can we do the automobile, only run it on either steam or with some kind of horse that eats hay? Because we have plenty of that. It's like, yes, but what you're thinking of is the steam locomotive and the horse carriage, and we already have those. You can't do electricity, light bulbs without electricity. You can't do automobiles without gasoline. And you can't do the blockchain without Bitcoin. Thank you. So I'll take, I've got maybe 10 minutes, 9 minutes to take some questions. Please ask the question once you have a microphone, because this is being live cast and we want the audience to be able to hear it. Thank you.
Andreas, how are you? Thanks for the talk. It's always great to hear you, you speak. What is the transition best case scenario away from fractional reserve banking if and when Bitcoin hits critical mass?
What is the transition away from fractional reserve banking if and when Bitcoin achieves critical mass?
Best case.
Best case scenario. I think people underestimate the other side, meaning that we're not just trying to make Bitcoin succeed. That's part of the equation. But Bitcoin doesn't exist in a vacuum. It exists in a context of 194 other currencies, including the US dollar as a world reserve currency. And here's the thing you don't see on the news, or if you do, you see it very rarely. Our generation is currently experiencing a historic event, an event that has not happened in the last 3 centuries, a currency war and race to the bottom of absolutely unprecedented scale. Never before in the history of currencies have 21 central banks fixed their interest rates at 0 and kept them there for almost 6 years. This has never happened before. Never before in history had a central bank gone to negative interest rates and then be followed by 6 other central banks. Never before in history was deflation occurring simultaneously in the entire world economy. So you've got to understand that sometimes it's not about Bitcoin succeeding. It's simply about Bitcoin surviving while the entire world economic system collapses in ashes around it. We are watching, and this is not flippant or funny. This is what leads to wars. This is what leads to violence and strife and ash and ruins in real life. The last time we had a currency crisis of this scale, and it wasn't this big, was in the 1930s, and we know what happened next. This has never happened before. We are living at a time when every single central bank on earth has gone nuts, and everyone is pretending as if there's nothing to see here. Unemployment out of control, middle class dying, stock market at all-time highs. How is that possible, right? Bonds tanking, stock market exploding. Currency tanking, stock market exploding. These things are not possible. Rational economics tell us that these things do not work. So the question about what happens with Bitcoin next is really the small question. The big question is, where do we go when the era of central banking dies? Because it's about to die. Okay, next question. Who's got a microphone?
Hi, Andreas. Thank you. You've been just wonderful for the community for so long. Jason Wong, just a retired physician with a business background. Your whole premise of the talk is about greed and honesty. It's interesting. As the ecosystem develops and there's more financial derivative instruments, do you see a possible scenario where a derivative instrument with a 51% attack could be used to destroy the system?
I think 51% attacks are overrated as a practical consideration. The truth is that a 51% attack doesn't actually give the attacker a good outcome. And it takes a lot of resources. And as I said before, I think when you reach the point where you have that amount of resources, the natural and rational calculation will be to invest them in getting more Bitcoin instead of attacking the system. The scenario under which it works is an attacker who is not interested in or motivated by profit, but purely for destructive means. And what that will do is it will force the system itself to evolve. Now, the advantage here is that Bitcoin is a decentralized organism that is dynamically scalable and can be modified. It's software. And it's not easy to modify it because it requires consensus. But if it's under attack, that consensus happens more easily. And I am very confident that software systems can and do adapt dynamically to external threats. The interesting thing is that when they do so, they become stronger over time. And so we've already seen that. Bitcoin has suffered setbacks and attacks again and again and again. And as time goes by, Bitcoin gets stronger, it's harder to attack it, and it learns more and more attacks. It's building immunity.
Thank you.
Yes.
Thank you very much for being here today. I've been following Bitcoin for quite some time, and everything I see and read in presentations you give and what people in this room are doing with Bitcoin is true. It's solving a lot of problems. Software will solve problems. Technology always solves problems. However, we live in a world where, even though that may be true, philosophy is what convinces people of things. And right now, it seems like something like Bitcoin is at the forefront of a giant wall of this convincing when it comes to philosophy. And I'll make the question now. How do we convince those who wish to invest in Bitcoin and Bitcoin-related companies that it has this world-class security, which I agree with you, it does, when all we hear about is hacking attacks to steal Bitcoin? And please don't use the recent incident of $1 billion being stolen by these Russian and Chinese guys, which just happened with real cash, when there's all you'll ever be convinced about is it's no good, it's going to get hacked, and so you can't use Bitcoin. How do we convince people of that? I don't believe that.
Yeah, we don't.
I wouldn't be here. How do we convince people out of that?
We don't convince people to use Bitcoin. I think it's a mistake to convince people to use Bitcoin. I think we work hard on making Bitcoin even more useful and even more applicable for more and more people around the world. And the simple truth is that if I have to convince an American about the use or the usefulness of Bitcoin, it's an uphill struggle. It's like, you're 5% of the population, you've got the only world reserve currency, your bank is not stealing from you, but a far, far worse, and most people live in a world that is very different from this. Bitcoin doesn't require a hard sell because Bitcoin solves life and death problems for some people around this world. There are 6 billion people who have underbanking facilities, who live in places where they have cash or barter-based societies, whose government is actively stealing from them and is little different from organized crime, where the banks are organized crime, and where the simple process of securing a future for your children is fraught with risk, as you see your entire fortune destroyed in a single generation, not once, not twice, but maybe 3 times, as occurs all across Latin America, parts of Southeast Asia, and recently Southern Europe, where I come from, in Greece. In these places, and in the places where the only form of technology available is a Nokia 1000 feature phone, where the nearest bank is 100 miles upstream by canoe, and where banking services will never reach, we have the opportunity to bring 6 billion people into a global economy that they have been excluded from because of politics, cost, and inefficiency, without deploying massive amounts of infrastructure, by engineering a technological leapfrog event, just like cell phones leapfrogged landlines in sub-Saharan Africa, Latin America, Southeast Asia. Now every single one of those cell phones can become a Bloomberg terminal, a stock exchange terminal, a Western Union remittance terminal, a mortgage origination terminal, a lending terminal for microloans. That means that every phone becomes a banking service. And if you bring that to the world, they don't need convincing. Thank you.
Yeah, it sounded like you were claiming that the current mining security was enough to sustain a much larger economy. But if the economy of Bitcoin grows, won't more miners scale up their operations to spend more to claim the reward?
Well, if the economy grows, it depends on whether, really the only dependence is whether the Bitcoin price encourages even more speculation. But you've got to realize that what we're looking at in terms of mining industry from, say, 2014 out, and what we looked at from 2008 to 2014, is that in the first period, we're looking at order of magnitude improvements going from CPU mining to GPU mining to FPGAs to ASICs. You're looking at 100x plus improvements, generation on generations of chips. That evolution has now run smack into Moore's law and is at the cutting edge of Moore's law at 28 nanometers or below. There is no 100x improvement now. In fact, Bitcoin mining is now driving chip fabrication faster than desktop CPUs, which is incredible to even think about. And it may be the first technology that goes sub 14 nanometers, even before GPUs. Now, what that means is that we will not see 100x improvements. You cannot outpace the competition by getting the next generation of chips faster than everybody else because it hasn't been invented. So now mining, in order to continue to be profitable, has to be hyper efficient in terms of operating costs, cost of electricity, thermal efficiency, electrical efficiency, and that's where the game is. Where we're going to see mining go is not in massive increases in hash power, but in more efficient uses of electricity for the existing levels of hash power. There is no 100x increase possible in the next generation. I predict we're going to see mining technology surpass the current state-of-the-art in data centers and start approaching the state-of-the-art of nuclear reactors. Meaning that if you want to generate that type of thermal load, you're not looking at a 10 kilowatt air-cooled rack in a data center. You're looking at a 100 kilowatt submerged in mineral oil in a cooling bath, which is really nuclear reactor technology. And that's where you see the next generation of efficiency. It's really mind-boggling, but that's where we're going. So the mining industry cannot scale 100x because of physics, but the economy will scale a lot more than that. Thank you. Do I have one more question? Out of time. Thank you so much. Thank you, everyone.
Thank you, Andreas, for that amazing talk. Another round of applause for, Okay, here we go.
So, arguably, currency speculators make up the largest group of Bitcoin users. Today, we're going to hear from some of the people who participate in the markets as both traders and infrastructure providers. Please welcome Joshua Lim, the head of trading operations at Circle, formerly Goldman Sachs and an MIT alum. Juthika Chow, co-founder of LedgerX, also formerly a trader at Goldman Sachs and an MIT alum. Bobby Cho, Director of Business Operations at ItBit, formerly VP of Trading at Second Market, and our moderator, Harry Ye, a Managing Partner at Binary Financial. Please welcome them with a round of applause. You can do whatever. Do you want this microphone? Yeah, sure. Actually, just leave it there. Are you sure?
Good morning, everybody, or good afternoon. Actually, it took me 18 hours to get here. I almost didn't make it. The Uber dropped me off in the wrong building. They need better signs. So it's actually kind of a nice change. Usually, I'm the one that sits on the panel, and this is actually the first time I get to moderate. So I'm actually kind of looking forward to this because I get to ask the questions that nobody else gets to ask, but are kind of curious about. So, Josh, I just got to ask you: do you trade on Coinbase?
We do. I mean, we really respect a lot of the great products that are coming out of Coinbase, and we think they're a great company, and we think that they add a lot to the ecosystem, and that's why we really want to work more closely with them in the future.
Great. That's a good answer. Okay, so I'm going to actually, because this is more of a trading panel, I'm probably going to spend a little bit more time talking about exchanges, just things that I'm really, really curious about as a user because I trade on a lot of the exchanges. So first thing I want to ask is, so Bobby, this is more for you. Why is everybody building exchanges? I mean, aren't exchanges kind of like right now, there's so many of them, it's a huge fragmentation. It almost seems like it's a race to the bottom because everybody's going towards 0% fees. So I just kind of want to get your view as somebody that's an exchange operator.
Yeah, so I think that's a really good question in terms of, at least here in the US, you have a number of people and companies trying to start exchanges. But conversely, in China and in Asia, you don't really have that type of action going on, simply because I think you have market leaders in that country, whereas here in the US, no one's really grasped it. A lot of the exchanges that do trade, that do trade the USD pair are offshore. And so no one has really cracked kind of the solution here in the U.S. to being a fully regulated exchange, nationwide, and so that's obviously what we're hoping to solve in the coming future.
Okay, so that kind of leads me to the next question too. Like, is the United States actually the most important market for Bitcoin? Because first off, the U.S. is a really, really heavily regulated market. So I guess even Josh, if you can kind of elaborate on this. I mean, do you guys actually think that, I understand it's an important market, but it just doesn't seem like the U.S. is the most important market right now when it comes to Bitcoin because China seems to lead the price. So can you guys kind of elaborate on that a little bit?
Yeah, so I think this is something that we've really observed over the last year is just the growth of trading and kind of the speculative usage of Bitcoin, especially in the Chinese market. And I think, if you kind of just observe based on published volumes, you'll see that Chinese trading volumes are, 5 to 10x what US dollar trading volume is. I think, part of it is kind of, that's what, I think in Asia, that's like a very common use of speculative instruments is as a, that type of mentality of kind of using it as a speculative instrument. But I think the U.S. kind of leads in a couple of other ways. That's kind of meaning, I think in terms of practical applications of Bitcoin in an economic sense, meaning consumers using it to purchase goods and using it as a transactional currency. I think that's really where the U.S. really shines. And I think that's where a lot of the exchanges that are cropping up in the U.S. really want to facilitate the growth of that kind of organic usage of Bitcoin versus just purely as an investment or a speculative instrument.
Sure. And then Bobby, can you elaborate on that?
Yeah, so basically, I think there's a lot of hope and opportunity here in the U.S., right? I think China is definitely leading in terms of volume traded in Bitcoin. But when you think about all the other types of institutions that comprise of kind of financial institutions, broker-dealers, hedge funds, alternative asset managers, and guys like them, I think the opportunity for Bitcoin to grow in actually a new market is what we're trying to solve here. So I think the opportunity for growth is greater here in the U.S., whereas maybe not in Europe or Asia, and I might be biased just because obviously we're based here.
Sure. Okay, that kind of leads me to my next point. The U.S. is actually leading the way in terms of innovation. So where I do see the U.S. actually leading is, investment capital. Coinbase just raised about $75 million just recently, and it just seems like there's a lot more venture investment going into companies here. People are investing in blockchain, versus in China, when I spend a bit of time, they actually say that even though the volumes have actually increased there, investment's a lot less. So do you think that innovation in the U.S., and all of you guys can answer this, is it's being stifled here because of the over-regulation? It almost seems like in the U.S. there's almost too much regulation for Bitcoin companies. So just wanted to kind of get your views on that.
Yeah, so I can go. I wouldn't say that there's too much or too little. I think the biggest difficulty for people starting companies is just that it's uncertain. There's just a lot of uncertainty at the state level and at the federal level. And so I think that's probably the biggest challenge that new innovative companies are up against.
Yeah, and I'll kind of add to that. Look, the bottom line when you talk about regulation for me is, what is it trying to solve, right? It's actually trying to solve consumer protection, right? So all the rules and regulations, and you can lead into the banking sector and other types of markets, but really what it boils down to is protecting consumers. And especially here in the U.S., when you have, customers or people in certain states sending money overseas and realizing that their cash is now gone, well, where are they going to go? They're going to go to the state representatives and say that this has happened. And so they need to proactively kind of manage that. I think the U.S. has done a good job in terms of getting all of the different regulatory bodies, and there are a ton of them in Washington, to basically say, well, let's actually look at this in an opportunistic way rather than just kind of killing it right off. And so I think that's kind of where we are right now.
Sure. And Josh?
Yeah, I think Bobby makes a good point about consumer protection. I think that's a lot of what we see today. Companies in our ecosystem are struggling against kind of a patchwork of regulations that's created by the state banking departments. So a lot of times when you want to actually engage in money transmitter activities, you have to kind of go state by state and get licensed, and that does impose a heavy burden on a lot of startups in our space. I think the core of that is each state wants to protect its own citizens, the consumer protection angle. There's also other kind of interests at play. For regulators, there's kind of the, I would say like the AML kind of like counter financing of terrorism angle, where there's kind of actually an important need to control the gateways into and out of Bitcoin where it touches fiat currencies, and I think that's something that is regulated on a federal level with FinCEN and the Federal Reserve. But I would also add there's another angle, which is the markets regulation piece, and that's really the piece that's sort of missing right now in the U.S. It's kind of getting built up as we kind of sit here and talk about it, but I think Judith probably has a lot more perspective on this. I know that the CFTC is getting very much more and more involved with the kind of development of exchanges, derivatives exchanges, futures exchanges in Bitcoin. And I think that's gonna be a very important catalyst for Bitcoin in the next few months.
So this leads me to my next point. How do you dealing with regulation at the same time? And then you have the exact opposite extreme, where you have a company like CoinEx, some people that are trying to regulate across all 50 states. Actually, Juthika, I think you guys, even at LedgerX, you guys have product ready, but you guys are dealing with regulation. So for a lot of people that are actually in the audience, people that are building startups, what would you guys suggest or recommend? Like, what is the right path for a startup or a company?
So I think a lot of companies and exchanges and startups have different vectors and levers that they can use to kind of be competitive and that they can optimize. And a lot of it sort of depends on who your end customer is. So for us, our customers are institutions. And so because of that, we have to prioritize things like regulation and trade surveillance and reporting and centralized clearing and those sorts of things that other customer bases might not necessarily care about.
Bobby?
Yeah, I think the bottom line is there's a whole spectrum of different companies in the Bitcoin space, right? And because of that, it touches a lot of different regulators, it touches a lot of different laws, it touches a lot of different regulations, frankly. And so I think, to your point in terms of advice, well, I would say you definitely want to consult with your inside or outside counsel on this. But basically what you want to do is I think you want to be mindful of what's going on, because even though, yes, Bitcoin is this new product technology, but you're still, for companies like us, we're still touching cash, right? And there are rules that govern how to manage cash, how to act as a custodian, how to act as a fiduciary. And so you can't just dismiss the other side because, oh, we're playing in this new Bitcoin thing. It's no, you have to find a good middle ground.
So this leads me to my next point. Do you guys think there's too much or too little or just enough regulation right now in the US? I personally think there's a little too much, but it's because of a lot of the bad actors before, and it's kind of flowing over into Bitcoin. But I'd like to get your views if you...
Well, I don't think there's really that much regulation here in the U.S. as it relates to Bitcoin specific, right? But I think there's a ton of regulation on anti-money laundering, a ton of regulation on money transmission. But I think it's actually rightfully so because, again, it kind of boils down to consumer protection, right? It's in my mind, at least, that's where it is. With Bitcoin regulation, it's TBD. At least in the state of New York, obviously, the Department of Financial Services is working on something called the BIT license, which I think will, hopefully this year, will come to market and will give companies guidance in terms of what they should and shouldn't be doing. And then after that, I think you'll see a number of other states kind of white label or adopt kind of the New York BIT license and kind of curtail it to their own regulations.
I think, I think just going off what Bobby said, the BIT license is a good kind of case study for how the regulatory bodies in the U.S. can kind of, the interplay between them and the Bitcoin ecosystem can work favorably for all sides. So I think when kind of the first draft came out, a lot of people saw, a lot of issues with it. For instance, the New York Department of Financial Security was kind of perceived to be regulating software developers. It was perceived to be kind of too onerous for startups. Guys, just a couple guys hacking together some kind of project would now fall under the DFS regulations. So I think after extensive work by the community to really reach out to Ben Lawsky and the regulators in New York, there was actually a lot of concessions made in favor of kind of promoting innovation in the Bitcoin ecosystem, to the tune of kind of having on-ramps for startups, to the tune of kind of explicitly carving out software developers and things like that. So I think that's kind of a good model for going forward what we might see. And something else to mention is, I think there's also a kind of a conference of state bank supervisors who are also kind of working on a model framework for how Bitcoin regulation should work on a state-by-state basis, but that could provide some kind of level of uniformity across a lot of different states in terms of approaching the regulation.
Yeah, I mean, I think in the cases in the areas where we have seen more clarity, I think it's been very promising. So, for us, our regulator is the Commodity Futures Trading Commission, the CFTC, and they have extensive history regulating a variety of commodity and currency derivatives, and we've had nothing but positive dialogue with them, and I think they've been very open and understanding, and they've really educated themselves on Bitcoin a lot. So I think when there's clarity, we've seen really productive, promising dialogue. It's just some of the uncertainty that still is the difficult piece.
Good. Okay, so I think that's enough about regulation. I don't think anybody wants to talk. So clearly there's a lot in the U.S. I'm Canadian, so we don't have as much. Okay, so I want to transition to the next part, which is about derivatives, because we used to trade derivatives actually in the equities market. And I think actually derivatives is a very, very exciting thing that's actually coming for Bitcoin. So Juthika, this is actually for you. What are your views actually on derivatives for being created for Bitcoin? Are they going to be beneficial for the price and the ecosystem longer term? Like, what's the effect?
Well, I'm going to talk of my book here. But listen, I think a real ecosystem has developed around Bitcoin, as we see, with real use cases and real companies that have very legitimate exposures. And derivatives provide unique hedging and investment opportunities. And so I think that's true of all markets, but I think because we're seeing such an ecosystem develop around Bitcoin, it's definitely true here. And if you look at historically, if you look at developed markets, the advent of derivatives has typically resulted in just lower price volatility and more stable price action. And I would guess that we would see something similar here as well.
But isn't price volatility good for Bitcoin? It's good for traders and it's good for exchanges.
it creates opportunity for traders, but not everybody wants that volatility risk. And I think it should really sit at the level of institutions that's comfortable managing it. So traders are comfortable managing it. There are certain traders corporations that are comfortable managing it, but not everyone should be facing that price volatility risk.
I can add something. I mean, so at Circle, my role at Circle is managing the treasury operations. So meaning we see a lot of the transactions coming in from our customers kind of on an aggregated level, and we go out into the market, we access a lot of different exchanges, we talk to a lot of trading partners like Harry, and try to find ways of reducing our risk from our customer flow. And a lot of the risks associated with that we can kind of mitigate with derivatives. There's a risk associated with holding inventory of Bitcoin. As you know, it's a volatile currency, so our market exposure can be reduced by trading options. And just there's kind of a host of other things like on a macro level that derivatives can help with. Observable derivative markets, if you can kind of use them as a gauge for how the market's pricing risk on a forward basis. So you can back out implied volatility levels, kind of how other people think how risky Bitcoin is according to other people's perceptions, and you can use that to kind of guide your hedging decisions over time as a trader. There's also kind of the benefit Jyotika alluded to is the growth of derivatives markets tends to add liquidity to an underlying spot market, and that's been observed kind of empirically across a lot of different asset classes.
Excellent. So which part of the derivatives do you guys think will actually lead the way? Will it be options? Will it be forwards? Will it be futures? If you could actually kind of elaborate on that. Because right now there's a futures market, but the futures market in China, it's really for it just seems like it's really more for gamblers. Like, I wouldn't want to hedge my portfolio of Bitcoin right now with 10x or 20x, and it's a BTC denominated, and it's essentially at the end if the price tanks, there's like clawbacks. So I'd just kind of like to get your views on that as well.
Yeah, I think different types of derivatives offer obviously different exposures. I think options are what we're starting with, and they're interesting because they offer more targeted and nuanced exposures. But I think the real important part is the clearing of derivatives, because it's not it's not as straightforward as a spot transaction, and once you get into margin trading, that risk needs to sit with counterparties that understand it, are comfortable managing it, and ideally are regulated to manage it. And so I think the clearing component is going to be an important piece for a derivatives market.
Anybody else have anything to add to that? Or
I'm often very just shocked to see like the growth of the Chinese futures market. So I don't know if you guys kind of have experience with trading on a lot of the Chinese like retail trading platforms like OKCoin or Huobi, but it's the volumes there are absolutely stunning. So like I think recently, kind of in the recent rally, that there was one day where I think 600,000 Bitcoin of volume traded on the futures. So that's that's the equivalent of 150 million. That's published volume. So you can kind of maybe take that with a grain of salt as well. But that's very significant volumes, and that dwarfs really the underlying spot market.
Okay, excellent. So that's actually most of the questions that I had regarding derivatives.
You're not going to ask us on price?
Okay, sure, why not? Okay, so usually people always ask me about the price, but okay, so what do you guys think about the price longer term? Do you think, what is the fair price of Bitcoin, and for each of the three of you? I think it's going to go to the moon. It's going to be about 10,000 at some point, but I just don't know when.
I think we're kind of right where it should be, right? I think I think it's a common question maybe everybody gets in this in the audience, from whether it's their friends or family. It's, why is Bitcoin priced where it is, and why should I buy it at this price, right? And the way, and obviously I think that the price is pretty consistent right now and at a good level. And the way I look at it is, what would you pay, right, for theoretically this widget or this tool, right, that could essentially do a whole lot in the future? So you're basically buying for a future kind of utility of this product, technology, whatever it may be, whatever you want to call it. And so I think the price is basically right where it should be. I don't
For
see,
now.
for now, yeah, I guess for now. But I don't see a huge spike in the future. Sorry.
Okay. Next.
I'm not going to answer the price question, but I will say I think that the next, one of the next big catalysts will be as regulated U.S. exchanges come online, because I think there's latent demand that just can't get exposure to Bitcoin in the current the current platforms that exist, and I think that will be a positive price catalyst.
Yeah, I think really the biggest driver of Bitcoin is the right now, I think, is the adoption of Bitcoin by the investment community, and I really mean like the large institutional investment community, like Wall Street, hedge funds. I think that's kind of, you need to have that base of kind of long-term buyers to counteract kind of the steady supply of mining that hits the market every day. So that's kind of what needs to evolve and deepen over the next few years, I think, before we can kind of see sustained price rally. I also think like a number of other catalysts that people should probably have on their radars is the kind of equitized assets for Bitcoin. So ETFs. The Bitcoin Investment Trust recently was approved by FINRA, I believe, to be listed on the OTC exchange kind of trading boards. I think products like that really expand the availability of Bitcoin to certain types of users, people who want to invest in Bitcoin in their 401ks or their retirement accounts. So that helps a lot, I think. Those are all kind of bullish things.
Great. So before we open it up for questions, just one more point I wanted to bring up. Actually, do you guys think in the U.S. States, do you actually think that more retail investors will be trading on your platform, or will it be more sophisticated investors, like people that actually use interactive brokers that trade options and equities?
So our exchange is and will be open to retail and institutions, but our target market is institutions. That's kind of my background. That's kind of who we're going after, because I think yes, the retail flow is good, but if you're really, and as you said, trying to take this to the moon, you need to open up this product to the existing investment world. And those are the kind of institutions we mentioned before: hedge funds, multifamily offices, and folks like them. And so I think for us to kind of take a leap forward in terms of adoption, even maybe in price, you really need to start attacking the guys.
Our platform is for institutions as well, and especially on the hedging side, I think the first important piece is the natural longs and natural shorts, as we'd call them, in the ecosystem, serving the kind of the true hedging needs. And then once more of a market develops, certainly years down the line, I could imagine more of a retail presence in the U.S.
Yeah, Circle is purely for consumers, so there's we don't currently service any kind of business or institutional accounts.
Okay, great. Okay, there are panelists, everybody. Does anybody have any questions for the panelists? Okay, you right there in the purple shirt with sunglasses. Can we give him a mic? Well, right there, you raise your hand, right? Yeah, so you have a question?
Yes. How are the back office environments of banks and brokers going to evolve using the Bitcoin infrastructure, like making things like real-time settlements?
So the question is, you want to repeat the question?
Yeah, so basically your question is, how are banks, whether they're integrating or looking at Bitcoin to integrate with back office settlement type of operations, is that correct?
To make back office
Actually, if you have questions, go up to the mic. It might be easier.
Sorry. You want me to ask it again?
Yes.
What are you seeing in terms of banks, regulators, industry groups like DTC, NSCC, Federal Reserve? How are they looking to adopt, and if they're looking to adopt, and when, the Bitcoin infrastructure to make things more efficient?
Yeah, I think I think they're all very, very interested in the technology, right? I think as Andreas had mentioned on the last panel, basically, is that they've looked past the currency and now realize that just tracking purposes, but they're all looking at it. Can I say that any banks have integrated with it? I'm going to go out there and say no. But I think that for any bank to dismiss this technology and say that, look, this is something that we don't want to get involved with, I think would be very, very short-sighted. And obviously these guys are interested in the technology.
Yeah, and I would say I think that one of the best and clearest use cases for Bitcoin in the Western world on the institutional side is for clearing and settling. It is a fantastic form of collateral, better than a lot of what exists right now with clearinghouses, and it's part of the reason that we have applied to be a clearinghouse as well. And so I agree. I think banks are looking at it, clearing organizations are looking at it. I think a lot of them recognize the potential, but it's a little bit too early for them to actively start doing something about it.
Yeah, I mean, I agree. I think actually, I think collateral management is like a great application of Bitcoin in that you can kind of continuously throughout the day, the night, whenever, just settle your collateral obligations. I think that's a terrific use of Bitcoin.
Okay, next question. Well, you're standing behind the mic, so you get to ask the next question.
Okay, thanks, guys. Just a follow-up about the margin, especially on the Chinese exchanges like OKCoin and Huobi. I mean, I don't know that much about margin, but to me, this idea of offering 20-to-1 margin on something as volatile as Bitcoin to retail investors is just like complete insanity. It's like selling dynamite to little kids or something. So I just
That's China.
Anywhere. So I just wanted to know if you thought that was like just an interesting development or just a crazy thing that's going to stop sometime.
So the question is, do we think China's market of leverage trading for 20x is like selling dynamite to children? And the answer is yes. Actually, it's actually our friends actually talk about this. It's purely a gambling and for profit only. Like, we do not use their futures platform at all for trading. Like, the only futures platform right now that we think institutions can actually use is one called BitMEX, but that's Bitcoin denominated, so you just have to be aware of that. So I think 3-to-1 is kind of what everybody at this table would agree to is like a reasonable margin, because that's actually what is considered reasonable. But yeah, it's kind of like if you open up a Forex account and you go, hey, I can get 100x leverage. Well, it's the same thing, it's just gambling. That's my view.
Yeah, I agree. I mean, look, I think there are reasons why the SEC denotes people as accredited investors or denotes people as QIBs, qualified institutional buyers, simply because they meet a certain requirement to say, look, you're a big boy, we don't need to take care of you as much as the average retail guy. In my mind, at least, what these other exchanges are doing is they're empowering the retail investor to feel like a QIB or an accredited investor with these tools and these offering the 25-to-1, 50-to-1. We wouldn't do it. I think it's again, it's kind of like a gambling mentality. I think it's just a different way of looking at things.
And I just think philosophically, for an asset that's so new and volatile like Bitcoin is, exchanges should not be competing on margin. There's a lot of other things they can compete on, and margin should not be the one.
Yeah, I get a lot of excitement trading Bitcoin just on 1-for-1 leverage. That's exciting enough for me. 20-to-1 sounds kind of crazy, and I think, if you've been following the news, you've kind of observed that even traditional FX markets have been extremely volatile lately, and that has had very, very bad consequences for kind of margin trading platforms that offer very high leverage to even traditionally quite stable safe haven currencies like the Swiss franc. We've seen a number of companies blow up in this space.
So yeah, I hope you don't trade on those exchanges. Okay, next question?
Yeah, can I have a question?
Yes, you can have a question. Just because you asked so nicely. Yeah. What's your question?
Okay. So I think the most important advantage of the Bitcoin is it is a currency without trust. But when we convert Bitcoin into fiat currencies, we have to introduce trust again. So you guys run Bitcoin exchanges. So how do you think about the trust on the Bitcoin exchange? And do you think is there any way to mitigate the problem of the trust on the currencies, Bitcoin exchanges?
Okay, so the question is, Bitcoin was inherently designed as a trustless mechanism for exchanging money, but when you convert to fiat, you have to introduce trust again. So I think, Bobby, you should take this one.
Okay, so obviously ItBit's whole stance is that we would be regulatory compliant in every jurisdiction that we operate in, and that will be the case here in the U.S. too in the near future. And the way that so basically it's the way that you build the trust, right? It's why do you trust platforms like TD Ameritrade or Schwab or other things like that? Well, it's because they have to hold certain regulatory capital requirements, whether it's requirements from banking licenses and things like that. I think that's the way that you get people to trust you, right? Is that you've met some requirements from a regulation standpoint that in turn, that's why people don't ask Schwab or TD Ameritrade, hey, look, I want my certificates of the stock that I just bought, and I want you to actually mail them to me. You know, that's why you kind of leave it there and you leave your cash there. Where, for better or worse, with Bitcoin exchanges, and I was the same way when I was trading at Second Market, I never, ever wanted to have any cash or any Bitcoin exposure on the exchanges because, look, if it went under overnight, would I have been that surprised? Probably not. But I think that what we're trying to do is build a company that people can look at and trust, and it starts with management, our board, and the folks that we're kind of bringing into the company.
Yeah, actually, I'll just add to that point. I think trust is, I don't think you're ever going to have trustless money. Like Bitcoin is just a protocol for transferring and exchanging value. But at the end of the day, if somebody's going to wire you $5 million to help buy Bitcoin, you better trust that person. They're not going to run off with your $5 million. So you have to develop that trust somehow. I don't think you can get around the issue of trust just because of technology is not there to replace trust. It's just to make it more convenient. That's really my view. Anybody else have anything to add to that for trust? No? Okay. Next question. Anybody? You up there. Can you give him a mic? Somebody pass the mic to him. No mic, no questions.
So the question is about derivatives and bubbles. You know, we have for 4 centuries since the tulip mania and derivatives, it systematically has wiped out underlying assets and the ecosystems around it. And as China as an example, it's happening with regulation. Are we at a point where we're far away from it, where it can cause such a disaster without a comeback? Are the systems in place to protect the evolution and growth of Bitcoin and the industries around it? Or is that a big fear?
So, is your question, is there bubbles in Bitcoin? Is that
this bubble's going to be in everything, right? And especially this bubble's going to be in everything, especially when they attach derivatives to it, and it's a financial class. Are we seeing, I mean, what we're seeing in China, and is there fear with this group? And do you believe there are systems in place when this, if it happens in America or more institutions coming in?
So the question is, do we think there's fear in, I guess, for a bubble?
Yeah.
Yeah.
From a speculation in derivative and,
I don't think we're at that point yet. I mean, the Bitcoin volume and price, it's been pretty healthy. I would say, the drop from 1,000 to, 155 and then back up, that's just the way Bitcoin actually is because there's no way to really kind of hedge right now. So I think once hedging comes in, the volatility will go a little bit less. But then, yeah, I think you're still going to see these big, massive price swings. Like if it goes up and then there's some major event that actually happens, it's going to cause the price to drop. And it's just part of price.
And I think healthy derivatives markets have a good mix between hedgers and speculators. And so when we talk to our potential customers, that's what we see as well.
Yeah, but they said that about the mortgage market 7 years ago as well, right?
I don't think you have CDOs being developed.
But that's my question.
For Bitcoin
right?
yet.
Right, but that's my question is, right? If it's not yet, we know the people in the finance and derivatives.
Sure, I mean, Bitcoin's a tiny market right now. It's a $3 billion market cap. I mean, Apple does more than that in like a day, probably, or something. I don't know, like a month.
It's an absolute fear, I think, right? It's if you're not aware of it, you're trying to build the foundational blocks for it. And in my mind, it starts with the spot market. Then with the spot market, you get price discovery. With price discovery, then you can move on to derivatives. And then from derivatives, then maybe explode
Yes,
into
then-
other types of
Okay.
Yeah, so now is still a good time.
Right,
There's
okay.
no WMDs of derivatives yet,
Okay.
as Warren Buffett would say.
Thank you.
We got 5 minutes. Any more questions? Oh, you raised your hand, but you're behind the mic. See?
Sure.
Okay, Mike.
So one of the things that came out of MTGOX was some heavy suspicion of market manipulation, the Willie report and so forth, trading bots that were acting at someone's control that we weren't fully aware of that may have been pumping up the price and so forth. I'm curious, what are the next generation of Bitcoin trading institutions doing to prevent those types of things occurring again?
Sure. So the question is, and by the way, I like how you said MTGOX. If you guys don't know what that means, like empty as in the word empty, and then empty. That's actually why they call it MTGOX. But the question is, what's going to be done with, I guess, exchanges in the future to actually kind of help mitigate the risk of that, trading bots don't happen on Mt. Gox, kind of similar to Mt. Gox. And I think actually, I'll answer that. Like right now, you just have a lot more platforms out there. So when I started trading Bitcoin, there was really only Mt. Gox, MTGOX, and Bitstamp. But now you've got Coinbase, you've got itBit, you've got OKCoin, you've got Huobi, you've got a lot of these. So it's much more difficult to manipulate the price. So I think it's actually much safer. It's a much safer, healthier environment to trade Bitcoin now than it was, I would say, probably even a year and a half ago. That's my view.
I'd just say any exchange that's running principal money on the exchange against their customers, in my mind, that's a big no-no. And so if any exchange is doing that, right, I think that they're actually, one, taking advantage of their customers, and obviously we don't do that, so that we don't run any proprietary bots or anything like that. Do we have market makers on exchange? Absolutely. But at the same time, we would never run against customer orders.
And I think just regulated derivatives exchanges, at least, so our regulated CFTC, are subject to extensive trade surveillance and making sure that there's no distortions and manipulation and fraud. So I think as you see more regulated exchanges pop up, you'll have more surveillance that's on top of it.
I think.
Okay. Last question. Oh wait, you want to answer that?
No.
Okay. So last question, and then we got 2 minutes. Then we're gonna go.
This is regarding it's great that there is a lot of speculation, a lot of trading happening on Bitcoin. But do you guys have a view on or a sense of what is the ratio of real transactions used for economic things versus trading transactions on the blockchain?
So the question is, right now, it's almost utility versus speculation. So, Josh, because this is more consumer.
I mean, there's a couple of ways to approach that question, right? You can ask like how much economic notional is actually transacted per day in Bitcoin. I think this is a better question for merchant processors like Coinbase or someone else to answer. But I would estimate probably on the order of a few million or less per day. And of course, you've got the mining volume, which is real kind of economic value that needs to be transferred. So that's also a few million. And then I think a lot of that, if you want to, there's a couple ways you can kind of gauge that ratio. You can look at Chinese volume versus US volume. I think that's like a good measure of how much is economic value being transferred versus speculation. Or you can also look at kind of these very fundamental metrics of like mining activity and merchant activity versus exchange volume traded.
Okay, great. Okay, everybody, give a round of applause for our panelists.
Thank you guys so much. That was super awesome. Let's give another round of applause to our finance panel. And our next panel is the lunch panel. So if you guys are hungry, head on out for some sandwiches. And also, to prevent creating a fire hazard, please disperse yourselves down the hallways, come in here, go outside.
And the next panel will begin at 1:20. after lunch. So come back in here by 1:20 for the next panel. Yep. Cool.
Yeah, once you just say the word lunch, people are like,
Exactly. No, yeah, we should. Well, for day 2, we should mention the time they come back before we say lunch, because that's when they leave and stop listening.
That's a good point. Also, it's on the schedule as well.
Mic check.
Do you have anything to write with it? Yeah. Time call? I'll call. We're going to start. Yeah, okay. All right. 1 second. I'm talking to...
We're by the mic, so we should
go away. It's muted.
No, it's on.
Hey guys, we're getting close to the time for our next panel, so if you want to head back to your seats, you may bring your food in with you.
Drive people away from their food.
Yeah, no, seriously, because we also started 15 minutes late. People have 15 minutes less for their food. And
no, but I thought you ended like kind of on time.
Well, we ended lunch on time. Usually.
Got it.
Because one of our speakers was like literally only staying for 30 minutes today. Joi Ito.
Oh, Joi.
Yeah. 2 to 2:30. So
awesome. He's great.
Yeah.
No, I mean, like, what about the MIT BCC? Oh, I mean, ask you, Jing, you want the MIT BCC? You can do both. Your handwriting is much better. Like, I just want to make sure I get it right. That's an ad so is that how you want to do it?
We'll start in maybe like 2 to 3 minutes.
Right.
I'll go make some. Yeah. So after you talk to her, we'll probably get started in like within a minute. Okay?
That's great. And then we have
we have until 2, basically 2. The next weekend we start at 2:05. So like, questions? 1:45. Yeah, 1:45 I think. So. Well, I mean, no, because normally we both come up, so it's going to be escape, and then I don't know how to like actually use Max, but it'll be minimize, and then just go to panels, and it'll be the second one in there.
Okay.
Okay, so
Here.
yeah, well, we're
Alright.
gonna leave this one up right now.
Oh.
I don't even know.
I think the live stream is not filming that though. Can we just put the next panel up?
If you want to. Do you want to do it before we announce it? Yeah, sure.
No, we found her.
Yeah, we found her. Yeah. Okay, that's fine. Oh, we have water for them. Nice. And I think he's talking to Constance now. Do we want to do a call? Like, do we want to go out in the hallway and call people in?
Most people have been called in. Let's do one more run.
Okay, good. We're gonna go outside one more time and call people in, and then we'll start. So, if you wanna like sit over there beforehand, and then when I call you, come up. And then, okay, sounds good. Good. Thanks. Hello, everybody. We're going to get the next panel started, focusing on Bitcoin regulation. This panel is led by Christian Catalini. He's a professor here at MIT of entrepreneurship, focusing on crowdfunding and equity crowdfunding. And he's also a principal investigator for the Bitcoin project that was launched last year. Also, as a note, throughout the panel, if you'd like to submit a specific question, you can tweet it at @CCatalini for questions throughout the panel. So we're going to hand it off to Christian.
I'd like to welcome a fantastic panel. This is going to be a difficult one. First, because we're after lunch, and second, because talking about regulation at MIT, which is a place known for building things and breaking them, and iterating on that will be challenging, but we have some great help. So we have Constance right here on my left. She has a JD from UC Berkeley, and she studied at Brown and the University of Cambridge. She was the general counsel and CCO for Kraken, so she has a lot of experience in this space. But most of all, she's a digital currency expert and has founded Data, and maybe she'll tell us a little bit more about that. Next to her is Elizabeth, which is also a graduate from a law program, Harvard, here next door, and she's a fellow at the Coin Center, from which we'll hear more in a second, entrepreneur in residence at StartX, and she is the founder of startbitcoin.org, which I also suggest you check out. Most of all, she's a thought leader in global free culture, and also in kind of thinking about how technology and digitization shapes our decisions in this space. And last but not least, we have Jerry, who has a JD from George Mason, where he's also an adjunct professor of law. His research focuses on internet and technology policy, and he's also the executive director of Coin Center, which is one of these institutions trying to bridge the gap between research and academics and practitioners and policymakers. So this panel will be kind of about regulation and policy, so we have a great set of experts to kind of pull from. I want to start with a little bit of a controversial quote. This is a 2009 article that appeared in The Economist. Let me see if we can kind of stir up a little bit of a storm in this room after lunch. The most important factor that led to America's stunning success in information technology was not the free market, but government regulation. Federal trustbusters made AT&T lease its line to others and eventually broke up the giant telephone company. Later, they forced IBM to separate its hardware and software businesses. These actions opened the door to competition and lower prices. More important, they changed the industry structure, replacing monoliths with smaller, specialized companies which have to work with others with complementary skills. The result has been tremendous innovation. And again, I'm not trying to draw a parallel between the debate we're having here today and the quote, but I think we live in a very peculiar era. To some extent, we are faced with the challenge of the pace of innovation consistently outpacing the pace of regulation. And it's becoming increasingly so. Startups that turn into giant companies like Uber, Airbnb, crowdfunding platforms, they've changed not only how we think about matching ideas, matching talent, matching funds, but also how we think about the economy. And regulators are often failed to catch up with the advances of information technology. At the same time, regulation is often put in place to defend us, the consumers. And so we should think hard about how to balance the trade-off between letting competition and market forces do their action, but also avoiding market failure, the tragedy of the commons, having public goods destroyed. And the issue is broader than Bitcoin. It becomes more severe with blockchain applications as we move not just from a currency, but also into smart contracts and other forms of IP and all the clever things that the people in the room are building. We really need to rethink how we deal with regulation and how we go about the process of regulation today. So on that positive note, I'd like to open it up to our fantastic panel to hear, if you had like a blank slate, knowing what you know about this space and knowing what you know about the dynamics of kind of IT and kind of regulation on the other front and policymakers, how would you go about reinventing the regulation and the debate about regulation for the modern?
Is that there's path dependency,
and that there's bureaucracy. Can you hear me? I don't think it's on.
I can pass mine if.
Okay, now it's on.
It's on.
It's MIT rebelling.
Hello? Okay. So the question is, if I had a blank slate, so nothing there, and a magic wand, right? Those pieces are important. Yeah, let me get this out of my face like this. The blank slate is important because so many of the issues with regulation today that makes regulation inefficient is because of the path dependency and because of the bureaucracy that make it very difficult to change. So what I would do is think about what is the purpose of a regulation, and then I would see if the technology allows us to achieve that purpose without a prescriptive approach, and maybe just doing it through technology. So let me give you an example of what I mean. Money transmission regulation, which each of the states does for itself, is a type of regulation that affects Bitcoin businesses, right? Because if you want to start a Bitcoin exchange or different kinds of companies that might hold custody of customer Bitcoins, you need to get a money transmission license. Why do we have money transmission licensing? Ultimately, it's an information asymmetry problem that the regulator is trying to address with regulation. So if you are a low-income person, you don't have a checking account, you get paid, let's say you get your check, you cash it, you need to pay your electric bill. Electric company doesn't take cash, so you need to get a money order. You go to the money order company, and you buy a money order, and you send it to your electric company. When they go to cash it, it bounces. Why? Because the company went out of business. They didn't have enough reserves. And so you didn't know that going in, but they went out of business. So the regulator sees this information asymmetry problem, and they say, we're going to license the money order businesses, because they're money transmitters, and we are going to require that they have a bond, and that we can see on a regular basis when we audit them once a year, which is not very often, that they are solvent. But the technology now allows us to see transparently on a minute-by-minute basis whether the company is solvent. So there goes the information asymmetry problem. Therefore, you don't need the regulation. So that's what I would do. I would look at what is the purpose of the regulation and ask myself, does the technology now help us address it in a way that doesn't require that prescriptive permissioning from the government?
Great. Elizabeth?
So first off, I actually find that regulation is a boring word. And granted, I went to law school and I even taught at a law school. But to me, this is much more a question about the future viability of this ecosystem and also that of policy. And Jerry stated very much, this is about what the technology is capable of doing and how it can serve a community and consumers. So for example, if I had a blank slate, our current regime is built for an analog age. It's built for an age in which paper and we didn't have public key, private key cryptography that could enable the kind of uses that we can now build out today. So the early internet has actually been instrumental in a lot of my work. And we're incredibly lucky, particularly to counter the statement about AT&T. So telecom was substantially different from the... And with that early internet, in the US particularly, we had safe harbors. So what are safe harbors? They were laws that enabled and often promoted uses that, say, would comply with the law, but it didn't hold intermediaries liable. So basically, if I'm YouTube or Facebook and a user posts an infringing photo, which a lot of users do, on my platform, I can still legally operate that platform as long as I comply with some laws. It doesn't require permission. There's sometimes some form of registration. But ultimately, anybody can start up, say, a site, an open source project, a business, a startup, and they don't have to ask for permission from the government. Within the money transmission space, things have been drastically different. You must ask for permission. As a result, we've seen relatively little innovation in this space prior to Bitcoin. So to me, right now, our entire regime is flawed in terms of the idea that one must ask for permission, and there are better ways, like safe harbors, like blockchain-based solutions, real-time continuous auditing, multi-sig, that we can use and we can actually promote to policymakers, to the Bitcoin community, to regulators as the way forward, as opposed to this idea that each, by the way, $5,000 per startup for 50 states, not to mention all the legal fees involved, is a lot of money for a startup that has, say, 100K, if that, and a few, coders working in a basement. So we need to reshape the conversation here in terms of what's possible, what the community can build, and also what entrepreneurs are capable of doing.
Great, Constance.
So, the internet, offers us a lot of really great lessons on how we can deal with a nascent technology and how permissionless innovation is really not only good for people, but good for the market. And the problem, of course, is that we're running internet technologies are running directly into financial technologies and regulations, which are really the most draconian and rigorous of regulations. So the two don't quite meet, and so you're also really running into a problem of translation, where you have policy goals that were meant for an analyzed that is now trying to be adapted to this decentralized world, and the analogies just don't bear. And so we really do need to have an entirely new conversation about what the goals are of these rules and how we can build the right rules rather than complying with existing rules. And so, the problem, of course, is that, law moves very slowly, as Christian pointed. It's based on analogy, it's based on precedent. So when you have a really transformative technology, it really challenges both lawmakers and policymakers and lawyers to really do that act of translation. And then, of course, and then on the regulatory front, as Jerry pointed out, it's a bureaucracy, and you have a misalignment of incentives. You have one federal agency that's focusing on securing the financial network. You have another agency that's focused on evaluating firms for financial soundness. You have another agency that is working on technology speeds up as these public policy concerns are being put out into the public. It's a challenge for regulators and for entrepreneurs. So, to your question of, what would I do in the blank slate, the problem with these exponentially transformative technologies is that it really exacerbates the governance gap. It makes it more exponential. So we have to actually, and because these issues are so complex and multidisciplinary, you can't have just one regulator that has one specific mandate talking to another technologist and expect that the right policies will emerge. So, I do think that we need to, it's a twofold challenge. I think on one hand, we need to build our products and services in such a way to provide security and to provide sound products to consumers and address the usability issues and make it safe. On the other hand, we need to, again, steer that conversation as both Jerry and Elizabeth have mentioned. And I do think that we need more of a collaborative rulemaking, policy-making process rather than one agency coming out with a proposal, the community reacting, and it being a conversation that's really based.
The internet analogy is useful, but to some extent we need not to forget that getting those safe harbors right or wrong can determine the fate of the regulation itself. And
Getting policy right or wrong, broadly. Yeah.
Right, so it is about policy. If it's too narrow, right, then the safe harbor is useless. If it's too broad, then we run into much bigger issues, from market failure to damages to consumer confidence in this. So how could you envision a better process where you take on one side you have policymakers, on the other side you have hackers, developers, platforms, trying to come up with new technological solution and making sure that they kind of speak the same language? Because on one side, yes, we can envision all the fruits of this wonderful technology, but there's years of development along the way into getting into smart contracts, IP, and all the kind of things that we're thinking about. Anyone, and then we can.
Yes. So to that end, that's precisely the problem that I think all of us identified very early on in the ecosystem. That technologists are building, but they don't really know what the regulatory concerns are. The regulators know what the concerns are, but they have no idea what the capabilities of the technology are. So the two must meet. And so what we've done is we put together a really multidisciplinary workshop. It was held at Harvard and MIT jointly this January, and And we had just a group of technologists, entrepreneurs, and subject matter experts and policymakers across 4 days, distilling what the state of the technology is today, what is capable today, talking about the regulatory concerns are, and really looking at mapping the goals of these rules to the means of these technologies. And so, we have working papers now across various subject matters looking at what are the issues around smart contracts, what are the issues around DAOs, how do we create oversight for decentralized networks. And, we're continuing that conversation at Stanford. So this is a joint Stanford-MIT workshop that's going to be held at the end of March at the Stanford Alumni Center, where again, we're bringing in policymakers, technologists, entrepreneurs, lawyers, legal experts, privacy experts, cryptographers, so that we can do exactly that exercise that Jerry was talking about, that we need to substantiate what the technology is capable of now, and perhaps the policy goalposts may have moved in light of these.
Jerry, you were almost jumping on the answer before.
So I think it's sort of a two-pronged approach. I think we do need to have these kinds of processes where we develop, where we articulate what we exactly envision as an alternative to regulation or where we think regulation can be improved upon. But at the same time, we have to recognize that regulators are people who have incentives that they are responding to. And those incentives are things like they have a statute that they are sort of required to enforce. And they're looking at and reading the statute, and it may not fit the technology, but that's their job. Their job is to enforce the statute. And so we do have to sometimes meet them on their own turf. We have to be ready with these ideas, but sometimes, especially in shorter terms thinking, you have to figure out how to get it as good as you can get it. I think ultimately there are some laws, some regulations that are impossible to comply with if you use, using this technology, and that's going to bring these conversations to a head where we might employ some of these solutions that we develop, and I think those will come soon enough. But if you're talking about money transmission, if you're talking about AML. They have
anti-money laundering for.
Sorry, yes, I'm slipping into jargon. You do have to be reactive sometimes. I think you try to anticipate, but sometimes it is waiting to see what the regulator thinks they want to do. Hopefully, you've already spoken to them, you've been there, you've tried to shape their thinking on it, make sure they have the right information so that they're not misinformed about what they're regulating. But you do have to be reactive sometimes.
Elizabeth,
So I'm concerned right now. California, just this last week, released a law saying that no virtual currency company could operate in the state without a license or with an exemption, which means for like banks or big corporations, certainly not small startups or entrepreneurs. New York has released a proposal that would substantially stifle innovation both in its state and beyond. Regulation right now is the biggest threat to the Bitcoin ecosystem. And part of why I'm so concerned is because this community, and granted, there are the folks that don't want any regulation, there are some people that want to engage, but people need to band together and actually say, hey, we can do things better. There's a better way forward. For example, the recent Bitstamp hack, I'm sure some folks heard about that. It is inexcusable that Bitstamp was not using multisig. As of several months ago when this technology has been around, it took a hack for them to implement that. We can do better as a community. And we can implement these technologies. We can show policymakers and regulators that we can create more secure, more efficient, and better systems. And that is part of our job right now. And I invite the community to engage and get involved and tell policymakers and regulators, A, that we can do better, and B, that the laws that they're proposing are not going to work for our space. It's going to stifle innovation. It can push it outside of the US. There was an argument that, okay, maybe fewer investors will invest in the States and it'll go abroad. But much of the VC money and so many of the startups are here in this country. The internet is global. We're also seeing, by the way, countries like Australia or the UK be far more friendly. They're much more open-minded to this space, and they want to compete on this level. There will be jurisdictional and regulatory arbitrage. People will leave. Entrepreneurs are already leaving this country right now to go elsewhere.
Right, so on that note, I'd like to take a step back, right? yes, regulation can stifle innovation, but at the same time, how do we get the problems that the regulators either have to comply because of some old law that they are kind of still abiding to, or there's still a mission of many of these offices that they have to pursue. How do we get those problems into the tech community so that, like you point out, the hackers, the developers can take those problems and create solutions? How do we get that going? Any ideas?
I mean, I think it's already happening. I think that solutions like multi-sig, solutions like proof of solvency are being developed. And I mean, you asked earlier, how do you convince regulators about this? I think it's very difficult to show up to them and talk about a vision of, a futuristic vision of how we can replace regulation, i.e. their job, with an algorithm. I think what you need to do is just do it. Start to build it, and I think we are seeing folks build it, and then they will see it, and then it's a matter of trying to get rid of that vestige.
And I do think that it's also a problem of, the ecosystem is small, and we're dealing with some very powerful incumbents, and there's so much innovation going on in the space, and I think that there needs to be a lot more coordination and collaboration within the ecosystem. There's just more, if this fulfills even the slightest fraction of the potential that we all think that it will fulfill, there's more than enough market share for everybody. There's going to be layers and layers of innovation. So, if we can raise the common floor of practices in the space, if we can prevent, these really badly executed hacks, implement as best practices multi-sig or proof of reserves. These would stop a lot of the bad news stories that's feeding into a very misleading narrative about what this technology is and can do. So to the extent that we can all kind of collaborate and share these kinds of practices, I think that it would really behoove us all. And it's incredibly powerful to the regulators actually when the ecosystem does act like adults. If you look at when MTGOX went down and you had the leading exchanges and wallets in the space, show basically their balance sheets that any user could check, for example. And I think that in a larger scale, we're really dealing with. I remember when I was young, I heard that 10% of the world own 90% of the wealth, and as a young girl, it was inconceivable to me that actually was the case, and now it's I think 99.1%, and so right now you're seeing an acceleration of that inequality, which I think is very systemic, which I think that the monopolies of the financial rails have definitely contributed to. So one of the really exciting things about blockchain, not just Bitcoin, but blockchain, is the ability to have this immutable, incorruptible data trail, that we can count things that we could never count before. And so it really begs the question, I've heard many times, everyone thinks that GDP is the cake and that everything else is the icing, but actually, the truth is that the GDP is the icing, and it's everything else that we don't count. That's the actual value creation. And so what would be very interesting and what I would like to see is for people to build these systems and start creating value systems that count the actual value creation. And so that would be a very, very interesting exercise to see.
Okay,
Bitcoin gives us a chance to start over, not only in terms of the monetary system, but in terms of a new decentralized protocol for technology. And that's actually part of why this discussion is so important.
Thank you. Let's go to the right.
There's different kinds of regulation. It's not so black and white. If you look at, for instance, healthcare, regulation traditionally, until recently, was primarily at the edge through licensed professionals. Lawyers are the same thing, accountants. And it's only recently that regulation has focused more on the central, the hospital, the vendor, the FDA. Where could that kind of, to the extent that Bitcoin is a distributed environment, could there be an intermediate kind of regulation where there's a class of professional that is licensed as a profession rather than depending on centralized capital-intensive infrastructure?
So, regulators are always going to try to find the choke point. That's the easiest place where they can, with the least amount of effort, get the most of what they want to do done, right? So that's going to be at some intermediary. So Bobby, Charlie Lee was talking earlier about online gambling and how the way that online gambling is regulated is through payment processors. Because there's a handful, there's 4 or 5 major payment processors that you can go to and say, don't allow gambling. And that's very easy to do. You have a decentralized system emerge now, and if everybody is their own payment system, if everybody's on their own bank, it becomes very difficult. It's not impossible, but it becomes much more costly to try to regulate those endpoints. But what we see is that new intermediaries emerge.
So we're unlucky. We're out of time.
Oh, we're out of time.
Essentially, I hope this was the starting point of a productive conversation around how do we get around market failures and the issues that this technology will open up. A perfect market, I know we heard this morning, exists. Economists tend to believe that there's actually reasons for market failures, and those need to be addressed. But I think we have enough talent in the room to tackle those challenges. Thank you very much.
All right, let's give another round of applause to our panel. So next up, I have the honor of introducing Joi Ito, who is the director of the MIT Media Lab. He's an internet pioneer and a radical thinker. Among many other things, Joi has served as the chairman of the Creative Commons, sat on the board of ICANN, and is on the board of the Mozilla Foundation. And as my friend Jeremy likes to say, if it's on the internet, Joey's probably got something to do with it. Joi has been spearheading innovation at MIT in many directions, but recently has taken a keen interest in Bitcoin and other blockchain technology. Let's welcome him with a round of applause.
So just so I get a sense of the room, how many people here would say you're technical? Most of you. How many of you were on the Cypherpunks mailing list? How many of you have been threatened by Timothy May? Okay. How many of you know Timothy May? Okay. So it's interesting because if you sort of go back, this isn't really a new thing. I have been paying attention on and off. I was paying a lot more attention in the 90s. We actually set up one of the first eCash servers, and I used to hang around with the cypherpunks at the hacking conferences because it was kind of where the fun stuff was happening. And so I've been interested in this space for a while. But what's kind of interesting is if you think about the arc of attention to cryptocurrency and the sudden increased attention, I'm sort of looking at other types of technology and platforms and how they proliferated and those different curves. And I want to talk a little bit about the community. But before I do that, I wanted to first shout out, I don't know how many of you have read this. This went out on the developers list recently, but it's a research perspectives and challenges for Bitcoin and cryptocurrencies. And it's a pretty good academic paper, and I think I'm sort of influenced by this right now because they go through and, a lot of the stuff you already know, but it kind of sort of systematically and somewhat academically and pretty neutrally goes around all of the various types of attacks and the weaknesses and strengths. And I think it's really important that we start to bring in sort of the how we call it, the more traditional computer scientists to try to look at this in a robust way, because in addition to all the regulators, I think there are a lot of people who still aren't sure how safe it is. And I think the interesting thing is we start to look at and scrutinize the safety of the technology using formal proofs and thinking about hardware and things like that. I always think about the fact that I guess it was Kevin Mitnick gets attributed for this, but the social hacking, the human in the loop, is actually the weakest part of the loop. So you can have an algorithm that is as secure as you could mathematically provably secure, but it's only as weak as the weakest part. And so obviously human beings, and the other part is hardware. So I find it fun and ironic that I love the service, but that Zappo has to put your Bitcoin into deep freeze with the power off to make sure it's secure. And we're still end up very much in the physical world, even though we think a lot about security. And so one thing that I think a lot about is, well, our Bitcoin is, we can do all these mathematical proofs about the algorithms and the consensus process, but at some level, at least the current versions of Bitcoin that we have are only as secure as the hardware that it's on. And we all know that all of our hardware is probably owned over many times over. And so then you start to think about, okay, well, how would you create hardware that you feel safe with? Well, you actually have to kind of build it yourself. You have to really understand exactly what's going on. And then you also have to watch it from the manufacturing process all the way to your hands, because somebody along the middle could tamper with it, right? So I think that right now, that's actually one of the weakest links that we have. We're doing a lot of work in Shenzhen right now, and I have been walking around, standing around on the floor of a PCB factory with people that I trust. And to me, at some level, working with people that you trust, with manufacturers that you trust, is really an essential element of that. So I think that what we need to make sure we don't forget, which is, I used to run an ISP, and I think a lot of people who used to talk about cyberspace sort of pretended like there was no physical element. But when you actually have routers and crap sitting around, that's where the regulators get you, like in the previous panel. It's those intermediaries. And the physical hardware is really, I think, quite exposed. So I think that in addition to thinking about, and at some level it's not the Bitcoiner's job, but the extent to which we're actually putting a lot more targetable risk into the hardware devices that we have right now, I do think that thinking about secure hardware in conjunction with thinking about the security of the network is extremely important. And then when you start thinking about secure hardware, you have to think about secure people. Do you trust the person on the factory floor? Do you trust the person that's carrying it across the border? And then the tricky part becomes that the human brain is pretty hackable. The human brain is probably more insecure than any of the software systems that we have. I mean, I don't know if you've seen Morin Cerf is an amazing guy, and he has this experiment where he wires up your brain and says, whenever you feel like it, click this button and the light will go on. Only rule is if the light's already on, don't click it. And he shows that he can see your neurons firing 5 seconds before you turn the light on. And so what they do is 3 seconds after they see you getting ready to make the decision they turn the light on, and you click it anyway because you don't realize the light's on. And then they ask you, why did you click even though the light was on? They said, oh, I didn't notice. And then and so there's a 5-second window in your brain after you've decided to do something, before you realize you've decided to do something. I would call that a pretty big security hole. And then because he's sitting there behind you, knowing before you know what you're going to do. And then what happens if you trigger that, I would call it the freedom of will, the free will neuron. And so we're learning more and more about how we're going to be manipulating our brains. And we're also finding out that we have a great deal of self-deception. So you could feel as trustworthy as you want, but somebody could easily embed an exploit that triggers. And we also know through hypnosis and other things that these sorts of things. So for instance, I have many friends that I would completely trust with everything, but I wouldn't trust that their brains haven't been tampered with. So I think that's something to think about. And we just did this week an amazing panel discussion on the microbiome, the gut biome, and the fact that a lot of our thinking and a lot of our personality is actually driven by the bacteria in our gut. And it turns out that for certain diseases, they do this interesting procedure called a fecal matter transplant, FMT. And basically, it's a poop transplant. So it fixes a disease, but what they found is that you also get the personalities and the allergies of the person that you got the FMT from. So if you could imagine stealth FMTs, right? So you wake up, suddenly you're a different person. We're going to need tamper-proof assholes, okay? And so, we're still at the point where we know experimentally that you can copy parts of the personality from one person to another person through a fecal matter transplant. What's going to be interesting is when the NSA and others start to design bacteria to get you to behave a certain way. And the interesting thing is that there's a lot of funding going to figuring this out to solve things like depression and other sorts of mental diseases. So when you think end to end, it's a pretty complex problem, and I think it's important to be very focused on the stuff that we're good at, but I think you also have to be very aware of all of the different layers in which the attacks occur. And on that note, I mean, I think, well, and by the way, there's a other part, which is when you think about the hardware, it's really important to remember that, I mean, this could all be a simulation, and we could all be sitting inside of a big AI, and it could all be a simulation, and then any security that we think we have is just an illusion, right? And what was this really came to life? I don't know how many of you know Bunny Huang. He's an MIT grad. He's a wonderful guy, and he had this Chinese GSM chip sitting on a board built into his laptop, and the chip had all of its pins wired up. So for all the chip knew, it was being a phone, but it was actually on a little card in his computer where he could manipulate every input and output. So the chip thought it was on its own, but he was completely monitoring and creating a simulation. And it's what's interesting is all of our hardware has these sort of concentric rings of vulnerability, and for that chip, it was completely vulnerable. He was reverse engineering it. But I think what's important is to think of these shells. And I think one of the shells, I mean, obviously the regulators and the real world has a lot to do with what we can and can't do with Bitcoin. But I think one thing to think about is the community and the architecture of the community, right? So if you think about technology that we use today, like let's say Ethernet, it probably wasn't technically the best thing that could ever have been devised at the time. But because of a variety of economic factors and personality factors, it probably got to the right place at the right time and became a de facto standard. And you can use game theory in retrospect to explain why IPv6 hasn't been deployed or why we ended up with Ethernet. But in advance, it would have been very difficult to predict that we ended up with a stack that's TCP/IP and Ethernet and all these different things. Those are all probably more to do with community architecture and personality than technology. And so as we think about, now I'm going to make an assumption, which is that as a community, Bitcoin wants to be broadly accepted and scale in terms of impact and proliferation. Assuming that's true. I mean, that's not necessarily the only success case. I mean, I think if you take the Tor network, for instance, I mean, I think it's extremely important and valuable for a fairly small subset of people, and that could be a possible end game for the blockchain, is a relatively small, isolated community of people who stick to it and no one else uses it. But that's, I don't think, what most of the people here want to do. I think most of the people here probably want it to scale. And so when you think about scaling, I think what's really important is to look a little bit at the different things that have scaled and why they've scaled and some of the things that didn't scale. I was at a conference recently with Tim Berners-Lee, and he got asked the question that everybody asks him, but actually he gave an answer that I hadn't heard before, which was, why did you give it all away? Why didn't you try to make money on the web standards? And we all kind of know the answer, but he said it eloquently, which was, well, first of all, it probably wouldn't have become the standard if I had patented and tried to make money. We all know that. But he also said another interesting thing. He said, like, I put all the slashes there because that's how people dealt with file systems, so I wanted that to feel familiar. And the tags were for the SGML and the markup community so that they felt familiar. But I was trying to design a standard that was most likely to be adopted by doing everything I could, by not encumbering it with IP, by giving it away and doing all these things. And I think that that's sort of really important. And the other part is that you've got Tim, right? And on the internet you had John Postel with initial names and numbers, and you had Linus Torvalds, who sort of draws a line in the sand around Linux and says this is in and this is out. And different communities have different governance structures, but most of these communities have ways of, first of all, making decisions, and secondly, kind of having core values. And I think one of the things that's tricky is you either have a personality or it evolves over time. So for instance, pieces of the internet after John Postel passed away, you know, ICANN doesn't work perfectly at all, but it sort of functions, and it's somehow able to allow the commercial interests and the government interests. For instance, we have, when I was on the board of ICANN, we worked out a lot on this. The government's participation in ICANN is only as advisors. It's called the Government Advisory Committee. And we did have this MOU with the Department of Commerce, but fundamentally the government doesn't control ICANN. No one controls ICANN. It's a consensus process. And it's able to protect the technical people from financial interests. So the people who work on the names, and well, especially the numbers, are making decisions fundamentally for engineering reasons. And I think this is really important because and I may be a little bit biased here, but there are a tremendous number of highly technical people who aren't motivated by money. And so, or by government. So that's why the internet isn't run by the government. It's why a big chunk of the root server operators are these crazy nonprofits you've never heard of, run by people like Paul Vixie and others who can just do it because they're able to attract the technical talent who just want to work in a place where they can focus on doing the right thing. And I think what's interesting is that as financial interests start to get involved in funding companies, in doing commerce, and regulating, it starts to skew the interests of different people away from doing it because it's right or doing it because it's technically correct to doing it for other reasons. And I think in places where the money has come in quickly and the technical people have run away, you see huge failures, or the worst cases where there were no technical people in the first place, right? But I think the government, at least on the internet, has realized that it can't control it, and the fact that it has to depend on a bunch of non-commercial hippies at some level, they've gotten okay with that idea that they're not in charge and it's not under control. But it took a lot of wrangling. I mean, I think some of the technical people probably underestimate how important the people in the middle were to try to cut the deals with the government and the corporations to keep them off our backs so that we could run the network in the way that we wanted to. So the web and the internet was sort of similar. So if you remember kind of the bubble around 2009, just before 2000, late 90s, it was a mess. It was technically turning to crap. You had all of these big companies. You had AOL merging with Time Warner. It was just turning into a big pile of whatever. And it's interesting. After the crash, one of my favorite quotes is Douglas Rushkoff said, because if you remember, the stock price went down to before the internet existed, right? So that was like the market just saying, you guys are all full of shit. You're worth nothing. You're nothing to me, right? So it's go back to the start. Douglas Rushkoff called this the internet fending off an attack by the venture capitalists, which is kind of interesting because that term, an attack, is actually a lot of how we think about the robustness of the network. But I think it's also how we should think about, if this were a community, how do we think about protecting this community and shepherding this attention to the technical things, attention to getting it right. And I think if you think about right after the crash, what happened, you had blogs, and most of the blog software was written by people who were recently unemployed and who wanted to say things, and they just wrote stuff. And so you had a lot of very healthy companies emerge after the crash because there weren't a lot of venture capitalists or money people around to sort of over-accelerate the investment. And I'm a former venture capitalist and I still invest. So it's not like I'm against venture capitalists and I'm against business. But there's a timing in which it comes in which is really important. Like as a startup, you don't want to take money before you know what you're doing. Because the venture capitalists are here to accelerate the direction that you're going. But if you don't know the direction, it's not a good thing. And I distinctly remember there was a thing called the Web 2.0 Summit that Tim O'Reilly used to run, and it was really trying to get everybody together after the bubble crashed and said, the internet actually is a thing, and now we can talk about it. And it was a really cool conference. But I can't remember which one. It was probably like the fourth or fifth one. I remember being on an escalator going up. And again, nothing against salespeople, but there were two sales guys wearing neckties in front of me, and they had just joined their companies like a month before, and they were exchanging business cards trying to sell each other shit. And then I looked over, and there's a trade floor full of booths of everybody trying to sell each other stuff. And I said, okay, well, this is great that it's turned into a thing, and that some of my favorite companies still exist, but my job is done here. I'm going to move on, and they made money from me because I had investments in some of these companies. But there's a phase that goes through when you figured it out, and it's a product, and then you hire the salespeople, and they sell it to each other, right? And I think that the tricky part about Bitcoin right now and the cryptocurrency is like everything's happening at the same time. So you've got the investors, you've got the salespeople. We haven't even figured out what the hell we're doing. We're still trying to prove that the thing even works. And so I think that the biggest risk to Bitcoin right now is kind of this the architecture of the community not being robust, because like we don't even know who's in charge. We don't have a Linus Torvalds, and then is it the core devs? Are altcoins part of it? What about Ripple? What are the concentric rings of community? Where do you call in? Where do you call out? We had the same thing even with Creative Commons. I used to have these licenses. And to me, when I was writing Creative Commons, anything that looked like a Creative Commons license that wasn't one was bad, because it was kind of it was like a fork, right? And so when you start to actually build a network, you want to stamp out forks. But if you're pre-building the network and you're in the innovation phase, you want forks, because those are innovation. And so I think we're in one of those periods also where you can't even tell whether forking is good or bad. I mean, it's a really, really hard thing, because people are already using it when we're still in the experimental phase. So I think that there's a tremendous amount of risk, and I think that the risk, what we need to do is really think about how does this architecture get created, the community architecture, how does that work? I don't really have this is more of a question, and I think it's something that we need to talk about. I don't think it's ICANN. I mean, I think there's enough difference between the internet and Bitcoin that you can't do it. I mean, money's already built into it. There's a bunch of fundamental differences, but I do think we need to think about how to think about it. I think one of the things that's important, and I like this is why I like this paper, and is that you do need a pretty substantial chunk of people who everyone trusts to be involved, not for commercial reasons, but because they want to make the thing work properly, right? And it's hard. It's because you don't know whether they're being exploited. You know, that maybe they have shares secretly in some company, or maybe, but maybe they work for the NSA. But still, at some level, if you have enough people, you can build this trust. And right now, there's so much blurring, because there's a lot of venture capital money, and it's really hard to find a safe space. And so I kind of want to end by proposing and then getting feedback on whether some of the academic institutions can serve as a place for that. I think this paper was, I think, Stanford and Princeton, and maybe I think there may have been another academic institution involved. What we're going to try to do, and I'm glad you're all here at MIT, I think MIT also has a role that we can play. I cannot officially announce, because we haven't announced it yet, but I can at least say that we're starting and we don't even have a name for it yet, but an MIT cryptocurrency initiative. We've had this Bitcoin project, and we've had people like Sandy Pentland doing the Digital Assets Conference and things, and so we've had pieces, and Christian and others working on Bitcoin stuff. I've met with the Central Administration of Bitcoin to go a little bit broader. So Simon Johnson, who's a very good economist, has joined this initiative. Ron Rivest, who's a great cryptographer, has joined this initiative. And so what we're going to try to do is to draw upon well-known neutral players who don't have a stake in Bitcoin to start trying to work on thinking about both the economics and the technical aspects of Bitcoin, and try to create this. And I know you guys are doing this the Berkman, Stanford, MIT on the policy side, but I think that at least at the beginning, I think academic institutions can and should serve as a place for people to come and hang out. And so for this initiative, we're going to be reaching out to other people that want to collaborate, both in MIT and as well as outside MIT. Brian, are you here? I was going to try to introduce you. So Brian, who's just raised his hand, he was originally at the White House. You don't hold it against him, but he wrote the internal White House memo on Bitcoin, and he's joined us to now be sort of project manager for trying to pull together the resources at MIT. So if you want to learn about how to get involved, talk to him. And I do think also, just to finish by cycling back to the original security discussion, I do think that real security, so not security for just our friends, but security from our friends and others. When we talk about true trustless networks, well, true trustless networks requires hardware that we can really trust. And so I think that's another area that I'd like to start working on at MIT, because we can sort of justify saying that we're going to try to research pure security without making it sound like a bunch of cypherpunks who are afraid of black helicopters, which we welcome into our community as well. So anyway, so this is what we'd like to do. I'm happy. Brian will be here. I'll be here. Anybody who wants to get more involved, and I'd love to coordinate with you. But I just wanted to propose that's a new project that we'll be starting. And thanks everybody for coming.
Awesome. Thank you, Joey. Let's give him another round of applause. We'll make sure we have a lot of tamper-proof things.
For our next panel, we're going to focus on security of the Bitcoin network as well as the ease of access of Bitcoin to consumers. Elizabeth Stark, who spoke on our panel concerning regulation, will be moderating.
Do you want to? She wants a chair. She wants a chair.
For sure.
Yeah. Okay. Oh, but your mic is here. That's it. Yeah, sure. And then.
All right. Hey, everybody. I think this is a highly relevant discussion right after what we heard from Joi. I talked a bit about regulation, but both security and usability are major passions of mine, and I would actually argue if regulation is the number one threat, these are possibly the number two threat. So I'm really excited to have a panel today of leaders in these spaces who are actively building the future of this ecosystem. And I'm actually going to ask each of them to do a quick intro about who they are and how they came to this space.
Okay. I'm Alan Reiner. I'm the original founder, creator, CEO of Armory Technologies and Armory Bitcoin Wallet. I actually was here last year giving a presentation on introduction to Bitcoin and security and so forth. Armory's been around since 2011. It started as a personal project of mine, primarily because I had started acquiring Bitcoins and mining, and I wanted to secure them, and no one else had a solution for that. So I started doing that, and so it turned out other people wanted that solution. So I got some funding, started a company, and now we're developing enterprise solutions. On the topic of security and usability, I think people who've used Armory would say that usability is not our primary priority, but that's because a lot of other people are focusing on that, and our focus is on the security side of things. And that's where we're going with large institutions and so forth who have the resources to get over the usability and actually do the security right.
Hi, I'm Melanie Shapiro, founder and CEO of Crypto Labs, and we've built a hardware wallet called Case. So I got into Bitcoin back in 2011. I was doing a PhD sponsored by Microsoft at the time, and learned about this thing called Bitcoin and became just utterly fascinated with the disruptive power of it, and spent the next couple years figuring out how I could do something meaningful in the space, and had this idea of trying to solve what I saw as security and ease of use, these problems that were going to prevent it from mainstream adoption. So back in April, founded Crypto Labs, assembled a team, and we've just manufactured earlier this year our first hardware wallet, GSM, biometrically secure. So we're going to be launching in a couple weeks.
Hi, my name is Christoph Atlas, and I've been around in Bitcoin since like 2012. I started off by writing a book about Bitcoin privacy. That's a topic that I care about quite a bit because I'm one of the starry-eyed idealists in the Bitcoin space. And recently I joined the blockchain team as a security engineer, and been focusing on sort of application security for that wallet team.
So first off, I want to start with a question for the panel. What do you see as the biggest pro and the biggest con in terms of Bitcoin security?
How about I'll take half of it? So I think one of the biggest limitations is the user themselves. So I think that placing so much responsibility in the hand of the user with their Bitcoin, oftentimes there's human error, human fault. You know, you lose the piece of paper that has one of your keys on it. I think that that's incredibly challenging for the average person to have the responsibility for. So I think that that's one of the biggest cons, and the ideal is really a user-proof Bitcoin wallet, I guess, if you will. So I think that's one of the biggest challenges.
So I think that one of the things we've learned over the years is that there's a lot of people in the Bitcoin community who think that Bitcoin is going to enable everyone to be their own bank and everyone's going to protect their own money. And I think that while there's some aspects of that being possible, that now you can do certain aspects of that the vast majority of users probably won't be. You don't want grandma protecting her life savings or her retirement fund with some piece of technology that she doesn't necessarily understand or care to understand. That's why we have banks in the first place. And banks, personally, it may not be popular. I don't think they're going to go away, but I think that there's kind of a synergy here where there's opportunity for security to be developed, but it doesn't mean that everyone has to be able to use it. And that has to be on both sides. I mean, not everyone needs to store life savings, and not everyone is going to be buying coffee with Bitcoin. So there's a spectrum here where I think that sometimes the community kind of mischaracterizes security as there's kind of a one-size-fits-all that's going to satisfy all members, all participants of the system. And really, there's going to be a spectrum there, and there's going to be companies and solutions for one side of the spectrum and companies and solutions for the other side.
So there's going to be, quite a variety of different needs that people have for Bitcoin, because there's all kinds of different people out there, different organizations. But I'm not sure that I agree that we're necessarily going to start out with people being their own banks, and then we're going to just gravitate back towards having something kind of in between, like an external bank and then being your own bank. I think that we'll probably stay closer to the realm of being your own bank in the Bitcoin space because, I think in terms of engineering, we can actually accomplish this. We can allow grandma to be her own bank without there being a substantial risk that she's going to lose her funds or she can't get access or hackers are getting to it or whatever. There's a number of things that we need to develop to actually get there, but I think it's actually going to stay that way. There's a temptation to say, hey, man, this Bitcoin stuff is really hard. People keep losing their funds either because they lose their private keys, they suck it back up, or they get hacked or whatever. But we have this central banking model, and that works pretty well. People don't get funds stolen from that much, and then the funds get recovered if that happens. Let's just go back to that. There's a temptation to try and roll back to the old model. I would really much prefer, and I think this is a much stronger model, to try to continue to innovate and try to find ways that we can fulfill everything that is possible within Bitcoin, and keep people secure. I think it's something that's achievable.
So I gave my grandfather Bitcoin for Christmas 2 years ago, and it's currently being, he's holding it in a hosted wallet. So I want to know, what does the world look like where my grandfather is his own bank?
Well, I guess to take it back a little bit too, to get people to actually be using Bitcoin, we're competing with credit cards, right? So it's fairly simple to use a credit card. There's very few steps involved. So that's kind of the benchmark. So we should all be developing products that kind of set that as the goal. How easy can we make this to use, but then also building underneath it all the security that's necessary when you are your own bank. I'm biased. I do believe that hardware obviously has a role in the ultimate security. But again, hardware can be expensive, and there's a number of wallets out there that can compete on price and others that can't. So I think the security ultimately has to be that of a bank vault, but easy enough to use that it can compete with a credit card.
I think there's an interesting dynamic here where it's not to say Bitcoin definitely changes the dynamics. It changes the kind of the calculus of security and the way people manage money and the way they move money. One of the things I like about it is that the fact that while I believe that ultimately there's always going to be institutions that are going to handle money and security for you, and then there's going to be people that are going to manage money, that one of the differences between Bitcoin and those bigger institutions and the money system as it is that there's this implicit competition where if banks and institutions are too aggressive and too abusive and charge too much, people can always go manage their own money. And there's very low cost of barrier for people to start up new systems to manage that. And so there's this kind of implicit underlying competition for that to happen, because people can only go so far before they start creating their own solutions. And I think Bitcoin does make it possible for innovation to thrive that quickly and that fluidly.
Just to touch on that too, I think that if we're trying to target a more mainstream audience, right? So that's the point here, to get more people to be using Bitcoin. You also have to change the way we think about e-payments and the way people behave when it comes to money. You go to a bar and you open a tab, and I feel fairly comfortable leaving my credit card behind the bar with the bartender, so I can have a few glasses of wine. And that's the thought, right? So that you can be a little bit careless. You're not completely at risk if you lose that credit card. But with Bitcoin, obviously we all know that that's not the case. So you have to change that perception and that behavior, and getting people to know that you do have to own your own security, and you do need to kind of be more progressive or aggressive about that.
So I think the world in which Grandma is her own bank is one in which we are able to adjust from a very old world perspective to the world of Bitcoin and cryptocurrencies. A lot of the challenges that come around usability and security come from the fact that Bitcoin is so different from what came before it, right? So we don't have the right security models. The users are trained very poorly. They don't know how to do backups. They don't know how to secure their computers. So I think specialized hardware is going to be a big part of that. Projects like Melanie's, I think, are very important because general purpose computing devices are not a great place to store money. That's like leaving your gold in a genie lamp that just gives everyone 3 wishes. So I think that's some of the discomfort that we're experiencing right now around security is going to be addressed in the future, and it's just a matter of getting to that, crossing that bridge to get to that future. I think things are going to look different in a lot of different ways that we can't currently conceive of, but a lot of the concerns, the things that we feel like they can't be solved right now are going to be addressed in the future. I have a lot of trust in that.
I just want to counterbalance a little bit and just look at kind of, when you look at privacy and security, there's some relationships there, obviously, that I think, and don't get me wrong, Bitcoin is transformative, and there's things that are going to happen with Bitcoin that are different. I just don't want there to be this belief that it's going to eliminate banks and that no one is going to use them. And one anecdote of that is just look at things like Facebook, where everyone wants to admit that they care about privacy, but you still have vast swaths of the population that are willing to give up their privacy just to be able to post pictures of their birthday party and give away all this private information about themselves because they can get free credits for playing Candy Crush on Facebook. And people, they like the idea of privacy and security, but when it comes to actually executing and taking that into their own hands, they've got better things to do.
I think that's one of the things that I expect to change fundamentally in the future. When you put it in the realm of money, people care a lot more, right? So Facebook, you lose some privacy. The NSA is downloading all of your photos and stuff like that. Like how is this practically going to affect your life in the future? When you have bad Bitcoin privacy, people take all of your money and they come hunt you down and they rob you around the corner, So I think that putting things into the realm of money is going to really change things quite a bit in a way that we're not going to expect.
So the vast majority of internet users don't even know what a web browser is. A recent survey amongst Facebook users in Asia found that they didn't even know that they were using the internet. If we're going to take Bitcoin mainstream, usability is going to be a major issue. But things like QR codes or strings of alphanumeric strings or long passwords that are random aren't necessarily usable. So my question is, are usability and security fundamentally at odds with each other? And if not, how can we address that issue?
I mean, I think there's a lot of examples where, on a spectrum, as you become more and more secure and you add layers upon layers of authentication and security, the use of it gets a little bit more challenging, a little bit more cumbersome. But I don't think it has to be that way. I think there are examples of, great products that are secure and easy to use, but
But
I do think, well, actually, so I think that LaunchKey is an interesting product. What's ideal security, though? I mean, what's that? I
believe LaunchKey is a device-based authentication company, right? Where you don't need a password and you can use your device to authenticate.
It's kind of like Authy, yeah. So I do think that we have to define what ultimate security looks like. And then what does the ultimate use case look like, and where those two come together is what we should be building products around. When we were designing our device, one of the features I was really passionate about was making it look like a credit card. And the reason for that was because, in 2015, embedded in our brains, we still think of credit cards and we think of payments. It's hard enough to get people to enter into the Bitcoin ecosystem. I didn't want that to be one more pain point. And then also keeping it as few steps as possible, but also trying to offer the security that's really obviously of paramount importance for that user.
I guess my perspective is a little, well, not contrary to this specifically, but perspective as being kind of an enterprise-focused company, focusing on large organizations with employees managing money that ultimately will have to exist. I mean, I think it would be difficult to say that Bitcoin will be mainstream, yet we're not going to have large banks handling money, and those large organizations are going to have employees managing money. You know, the difference between the consumer and the institution is that the consumer is managing their own money, and they're not going to steal from themselves. It's already their money. But when you have employees managing, it's a different story, and you have auditability requirements and certain things that you just can't do or don't even make sense in the consumer space. And in that sense, you know, my focus is on enabling those kind of larger organizations, which is kind of the narration I'm going with here, is that those organizations have to have high security solutions that are not going to be usable, but they're also large institutions that can train employees and implement strong processes around that.
Yeah, I second that. I think that the way I guess usability looks for the consumer and what it's going to look like institutionally on the back end is completely different. He's right. People have the time to be trained, and that's their job.
So obviously security, what we're aiming for is not absolute security or perfect security, but a certain threshold that depends. It's going to be context dependent. I think this like trade-off, and there is a sort of trade-off there, it has been reached in other industries before over the course of decades. So for example, automobiles, right? There's some trade-off between having a car that's really fun to drive and a car that's safe. You know, a car that has no doors, no roof. You can do all kinds of really exciting things with cars that they have no safety standards whatsoever. But as soon as you bump into something, it falls apart and you go flying over the windshield, right? Like that's a bad trade-off. But they figured it out over time, and I think we will figure it out with Bitcoin as well.
So we've talked a bit about the idea of banks, but my question is, does centralization of, say, consumer funds pose a threat to this ecosystem, particularly when it comes to security aspects? We've recently seen attacks on, I mentioned Bitstamp and many others. Let's discuss.
I mean, my opinion on that is simply that Bitcoin that whole infrastructure around at least centralized Bitcoin storage solutions is just not mature. I mean, we know about multisig, we know about cold storage techniques, and one of the things I talk about is things like in the institutional security world, this isn't new, having employees manage valuable pieces of information. I mean, they have processes around that involve people, witnesses, notaries, lawyers, very strong processes around this. And those have existed, they just haven't gotten into the Bitcoin system yet. And I think that there's this kind of, it's going to be there. It just hasn't been there. So I think that drawing too many parallels or, making too many conclusions on the current state of Bitcoin security doesn't necessarily mean that it's not going to be there. I think it's just that the maturity, the level of institutions and just overall adoption level just hasn't led to that being integrated properly.
Yeah, the pattern is, okay, we're going to start a Bitcoin company. Where do we start? Well, we're going to make a copy of the way that it worked in the last financial system, try to apply that to Bitcoin. We're going to have a lot of the controls that exist for banks are just going to be removed just because it's Bitcoin, it's new. And that's kind of a lousy place to start off, but naturally it is where we start. And I think that the space is developing very rapidly. And if we could get everyone, especially the leaders in the space, to adopt the sort of cutting edge technological things that we've come out with, we'd be a lot better off if we could see things like multi-sig, proof of reserves. I'm very excited about voting pools and open transactions. I think that will be a big deal for dealing with some of these centralized thefts. If we could get people applying this more uniformly across the board, we'd see a lot fewer of these big thefts, but it's just going to take some time to get there.
So one could argue that security and usability are only 2 pillars out of 3, and that there's a third, namely education. What role does education play in terms of engaging both the enterprise and the consumer-facing side of things?
Well, I obviously think education plays a huge role. Unfortunately, the amount of education that's going on outward right now into the mainstream audience is in the hands of the media, and the media most generally doesn't do a very good job of portraying Bitcoin in a very positive light. So I think one of the things that a huge challenge we have to overcome is how we as a community face towards that audience. And I think we're definitely getting better at that. The conversation is becoming a little bit more positive, except obviously when we have huge price dips. But other than that, I think that's kind of where the education has to start. There has to be people in the community who kind of step up and start speaking out about the benefits of and why. I guess the reason is why we need Bitcoin to succeed. And then once you have a positive conversation going on, then you could educate consumers about what it's like to actually use Bitcoin and transact in Bitcoin. But I don't even think we're quite there yet. The people using Bitcoin, I think, really they have a general understanding of how to use it.
So I have two thoughts about education. One is that it's a bit of a stopgap measure for designing security into systems, right? If we can educate users to be more proactive about protecting themselves, then we don't have to build as much security into it. But ultimately, we need to get to a place where we're just designing this stuff in. It's intuitive and natural and easy for users, and I don't think their education can be a replacement for that. We're not going to be able to get everyone to the point where they're the equivalent of an MIT, undergrad CS student or something like that. The other point about education too is it's very important for impacting consumer demand, right? So still in the Bitcoin space, I think this is a very good place for us to be. A lot of the progress that's made is driven by consumer demand and not from government regulations or industry standards or stuff like that. And in order for that progress to take place, the demand has to be driven by educated consumers. So a lot of, for example, something that I run into a lot is that a lot of Bitcoin users still are not hugely informed about the privacy aspect of Bitcoin. A lot more education about security, a little bit less about privacy. And so we're not seeing a lot of demand for privacy-friendly services, and that allows for the proliferation of privacy-unfriendly services. So the more that we can sort of educate users about, yeah, this stuff is important, it's going to impact you even if it's not doing it right now at this moment, it's something that you should be looking for and asking for from these companies down the road, I think that's going to create better services.
I know you mentioned a bit about this, but what benefits can Bitcoin's blockchain-based technology provide for security and both usability beyond just money itself? I mean, we've talked a lot about the future of the space. What do you guys see in the future?
So I think that Bitcoin is actually, in terms of pushing the boundaries on security, it's moving in several directions at once, and we're in the crypto side of things, we're way ahead of the curve, right? So right now we're seeing more and more companies getting into multi-sig, splitting up their keys, putting a lot of coins into cold storage versus the hot wallet and so forth. That's actually a lot more advanced than what a lot of banks are doing. Banks are, there's actually a very low percentage of banks that are doing things like splitting up cryptographic keys so that attackers have to compromise multiple sites in order to get to the funds and stuff like that. So on that front, we're doing very well. On the front of like application security, the more traditional kinds of network application security stuff that just happens everywhere on the internet and the web, we're behind because we're a new kind of industry. But I think we'll catch up pretty quickly out of necessity. As far as the crypto stuff goes, I think that Bitcoin is already ahead, and we're going to be, 10 years from now, it's going to be staggering how far ahead Bitcoin is in terms of securing customer funds versus something like a bank. And I don't think that banks can really catch up unless they go into that cryptocurrency space.
Yeah, I want to echo the multi-sig concept because I think that at its core, it presents something that's totally new to the world of, especially new to physical security. This idea that you can have something that is protected by ultimately private keys that are all generated independently in their own environments. They're never co-located, they're never brought together. You can independently generate them, manage them. The people who manage these devices, these keys, don't have to even know who the others are, yet you have to, and they don't have to know anything about the security. locations, that the fact that you can do this, you can create a truly, truly decentralized security infrastructure where at no point in the system was there ever a single point of failure. You can have, I've seen things like a tour of VeriSign's facilities where they have a 6,000-pound safe that holds, tons of cryptographic material, and they have, 17 people that you need to be able to get into that safe, but that cryptographic material was still generated in one place. And sure, they've got a huge process around it, and it's trustworthy, but maybe you can scale that back knowing that now you've got 7 independent locations that, and there was never any co-location of it, and that from start to end, you have a fully distributed security model.
Yeah, I think they touched on all the really important points, but, well, one, multi-sig, right? So I think that the interesting thing in a couple years from now is that there are going to be industries, healthcare industry, banking industry, financial industries, Internet of Things technology. I think everyone's going to be looking at what's going on inside our space and modeling their security systems off of what we've been doing for years.
So I want to talk a little bit more about hardware. For example, in the case of multi-sig, if you're just using a browser, there are still browser vulnerabilities, and people have supported, say, using extensions, but everyone knows that mainstream users don't really like using browser extensions. So to what extent can we have alternate approaches, like hardware-based approaches, I know, Melanie, you're working a lot on this, to ensure the security of Bitcoin and the broader system?
So one of the things that we're doing that I think is kind of interesting is, so one of the, it's a multi-sig hardware wallet. So one of the keys is on the device itself. One of the keys is stored in a database and a server, and the other one is stored in third-party cold storage that you can manage. But one of the interesting things I think is that we generate one of the keys on the device itself. So we don't actually embed the key on the device. We don't see it. We don't touch it. It happens in the device when you initialize it, when it's in your hand. Also, the idea that you aren't generating one of those keys. The key in cold storage is third party, and if you want access to it, that's great. But I think for the mainstream user, getting them to generate a key and protect that key themselves, that doesn't sit well with me, and I think that for a mainstream user, that's just not going to work out. So this idea of basically having 3 different keys, each one of our private keys is secured by a different layer of authentication. So the possession factor of the device itself, plus the biometric inherence factor protects the key in the database, and then information layer protects the key in cold storage. So that's my solution.
So one of the challenges around hardware wallets, right, is we need them, right? We need trusted competing devices to store Bitcoins and do our transactions and so forth. We need that desperately. But in the consumer space, we see a condensing to one device, right? So we used to have a camera and huge beefy machines, right? They can get smaller too. Maybe eventually it's a chip on the phone, or it's something that's going to be, maybe it's embedded in your body. It's not something that's going to weigh you down. But right now, the smallest device that I've heard of, maybe outside the ledger or something like that. But we've had Trezor and these other things that are like, I gotta carry this other thing around, and I have a carrying case for this. That's really a burden for the average user out there. But they're going to get tiny, and I think that problem is going to go away.
Yeah, one of the things that we're doing, and obviously putting a lot of money into R&D on this one, but right, I believe everything is moving towards the phone. We all want one device that holds everything, but I do think there's a challenge there too when this thing has every piece of valuable information about you, from your healthcare information to your money to everything.
What happens when you lose your phone or it's stolen?
So that's a huge challenge, right? So right now I think hardware plays a huge role in this ecosystem, but what role is it going to play in 2 years from now? I have no idea, but I think there are some interesting things that are being worked on to embed things into the phone itself.
So for completeness, I'll give the opposite direction, which is the enterprise side of things, where things are not necessarily getting smaller. And again, this goes back to the concept that concepts that have been actually around for 20 years to protect other types of cryptographic material that aren't Bitcoin, but haven't quite permeated into the system. And it's something called hardware security modules. And typically these are something on the order of like a $5,000 to $30,000 Linux box that you stick in a rack. that has FIPS certifications. It destroys itself when you try to break into it. There's all sorts of controls around this process, and it's what the biggest banks in the world use for securing data. It's what the root zone DNSSEC security, security that protects the backbone of the internet, uses these HSMs. And there was only recently a couple companies that have announced it. Armory is working on, announced integration with HSMs, and Armory is working on that as well. And it's just, again, it goes back to the maturity of it, which is these are things that have been around, and they are things that definitely, as large institutions get into it, especially when you talk about insurance and banks, they're actually already familiar with it. I mean, consumers wouldn't be familiar with it, but banks and insurance companies are already familiar with HSMs, and in fact, that's a prerequisite for declaring that you have a secure solution. Right now, it's really kind of a bonus. If a company has that, it's, that's innovation, whereas it should be a requirement from the start.
So recently we've seen the release of best practices around security. I know Will O'Brien over here from BitGo and those folks have been working on that. And I want to know, to what extent do we need to be more transparent and establish a set of practices amongst the community for better security and usability for that matter?
Yeah, that's huge. In fact, we use the matrix that they came up with C4. In fact, my engineers all have it on their desk. So I think we need more of that for multiple different types of, for wallets, for exchanges, for whatever else is to come. But I think that we definitely need to be modeling some things off of what they've built and what others are sure to come up with in the future.
Yeah, coming to some consensus about how we secure this stuff is absolutely critical. I think standards like that are fantastic. I'm working on my own project in the privacy space, which is the Open Bitcoin Privacy Project. We're working on publishing those kind of standards in the Bitcoin privacy space as well. And yeah, it's basic stuff that we've been doing in security and InfoSec for a long time.
This comes with the maturity of the industry too, right? So we're now starting to kind of come together and come up with best practices instead of all just kind of running around like the wild, wild west.
Yeah, exactly. I think it's kind of amorphous right now, but it's going to converge. I mean, what you're going to see is, as more institutions get involved, as more regulators and insurance companies come along, especially in the enterprise market, these things kind of converge. You see a lot of overlap in the way these things are managed, and what's trusted ends up being the standard. That you see all these companies that you believe are secure. What are they doing similarly? Well, that's going to become part of the standard in terms of what those processes are going to look like, the transparency of it, and the kind of the standardization. And that helps the industry because it now gives new players who come in a chance to say, okay, well now I know what to do if I want to get insurance quicker because these processes have already been vetted, and the insurance company is going to trust me when I use it.
It helps, and like he said, people coming into this space not having to start from scratch and make it all up on their own. But also the second point too is that so BitGo and C4, two different entities, organizations came together to put up this best practice. I think that the community itself, companies need to be working together to come up with best practices, and it's great to see the collaboration happening within the space, and we definitely need more of that as well.
By the way, personal pitch, Armory contributed to that too.
Oh, hey.
Oh, sorry. I'm glad I know that now. So last question until we open it up to the crowd, but I want to talk about crypto backdoors. We've seen a renewed debate, if I may call it that, resurfacing. The zombie kind of came back from the 90s, and some people, particularly on the international level, are taking this pretty seriously. I guess I'm going to assume that the panel is against this, but what can we do about this, particularly in terms of securing Bitcoin?
Well, this is really scary. I'll tell you a really quick story. But so I was interviewing somebody a few weeks ago, and he came in and he had this huge gap on his resume. And so obviously I asked him about it. So what did you do during this time? And he's like, well, I took this thing off my resume because I figured you wouldn't interview me if I left it on there. I'm like, oh, Jesus, what the hell? So anyways, he told me that he worked for the NSA. And I said, oh, okay, well, whatever. So what did you do there? And he's like, oh, well, we worked on firmware for a consumer device. I was like, holy shit. He was building like backdoor stuff. So it's a real problem. We didn't hire him, by the way.
I guess if you want to apply for a job, you probably shouldn't put that on your resume.
But it is a real problem. So with us, we're manufacturing. We have a device that we're shipping out. So we are using a New York State manufacturing company, and the manufacturing plant is 5 miles down the road from my office. So we're there when these devices are being manufactured. That's, kind of is the intimate, we want to be intimate with the process and watch everything kind of go through, and having internal, I think you mentioned this, we were on a call at one point and you had mentioned like basically having operational security within your organization is huge. It's so important. And so creating standards for that as well. And we obviously take that very seriously.
I think that, so I work for a blockchain, and one of the philosophies that they've adopted since the start of the company is you design the software in such a way that when someone comes knocking and they say, "Hey, we want you to do this," it's like, it's too late. We can't do that anymore. Sorry, that boat has already sailed several years ago, and I would encourage companies to do that as much as possible. Not necessarily because there's a particular organization out there that they're concerned about, but just that if you can give that access to one organization, that means that lots of other organizations can take it from you, right? So we want to try to build these systems to be as secure, as privacy-minded from the ground up. Otherwise, there is a countdown on your business or your organization where the compromise happens and people are going to be really disappointed in you.
Any thoughts?
I mean, operationally transparent is the right word, I think, is that, I mean, at the end of the day, you listen to someone like Joi Ito talk about FMTs and wonder if really there's any end to how paranoid you can be. And much of it, maybe not the FMTs, but much of it is justified, seeing what companies like, or organizations like NSA have done. But at the end of the day, it's really about the problem is split into many pieces, and you need strong organizational structure and kind of process, transparent process at each of those steps. And, at the end of the day, I don't think we can prevent certain types of things from happening, but we can certainly reduce it, at least pick out large parts of the problem and say, we know that we've done these right. Yeah. And that there are some forces that are sometimes maybe beyond our control. But at some point, you can't just throw up your hands and say it's unsolvable. You have to kind of do the best that you can with the parts that you do have control over, and try to encourage a culture or organizations and regulations and policies and so forth to solve the other pieces.
I'm not sure if we want to learn any lessons from Silk Road, but if there's one thing we can learn from it, is that you cannot overestimate the importance of OPSEC, because that's extremely important. Okay, questions?
Hi. My question for you would be this. We hear every day almost about stolen accounts in the world, and those are millions of stolen accounts. And I know lots of people in my around me that were probably among those stolen accounts. But I have never heard anybody complaining that any money was stolen from his account, particularly. That's the first thing. Second thing is, can Bitcoin be stolen first place?
Sorry, can Bitcoin be stolen what?
Can Bitcoin be stolen at all? And by the way, if I can buy a coffee for my Bitcoin, that's not a security, that's a limitation. Thank you in advance.
I think that the question, can Bitcoin be stolen at all, is really a question of, again, something that Joi Ito said before, which is the cryptography is sound, and it's really the process around it that is insecure, and the humans that are around it that are insecure. So, I mean, maybe it's a philosophical question to say, well, these Bitcoins weren't really stolen, but, I mean, the fact is that the world depends on the actual programs and the algorithms and the cryptography behind it, and everyone trusts it, and it has secured us for a long time. And when we talk about stealing coins, it's going to be the human element that leads to that, not necessarily the technological element, which may be that you had humans in the loop making bad decisions about which technology they used or how they developed that.
I meant by that that bitcoins are traceable at any moment, anywhere, anytime. So you can't steal it and say, no, I didn't.
Yeah, to a certain extent, there definitely are some wrinkles in that, and a lot of people who have stolen bitcoins haven't been tracked down to date. So there's some empirical evidence to counter that idea. But I think talking about compromised accounts is interesting. When we compare Bitcoin to the legacy financial system, the good news is that with the legacy financial system, we're not comparing ourselves to a standard of perfection. Compromise of that system happens every second of the day. You know, recently Apple Pay, it came out that maybe about 6% of their transactions already are fraudulent. That's a pretty high rate. In the banks all the time are having, you know, millions, billions of dollars leaked out of their organizations. Credit cards get stolen all the time. So compromise is happening on a mass scale. In a lot of cases, we're not hearing about it because those companies decide not to disclose it. In a lot of cases, we're not seeing the results immediately because the dollars don't get immediately like just taken out of our accounts and then not swapped back in, right? The credit card company, fraudulent transaction happens. They say, don't worry about it. We'll take care of it. But that doesn't mean that you're not paying for it. It means that we, as all credit card users, are paying for it on aggregate. We're just paying higher fees overall to cover those fraudulent transactions. So a lot of the problems that happen in the legacy financial system are hidden, they're socialized in a way that is not the case for Bitcoin. And so when we hear about all these account compromises and we see all the figures that have been stolen from different places, they may not be all that different from the legacy system, but it's a lot more obvious, a lot more immediate. So I don't think we have to reach a standard of perfection when we're trying to avoid account compromises.
Next question.
First of all, thank you very much, you two, especially with Armory being open source. And my question concerns open source, specifically hardware auditability. I understand that because Bitcoin's irreversible and a lot of these systems can be compromised even for large institutional investors. Right now, you see already companies, sometimes purposefully, sometimes not out of purpose, building backdoors, or during the manufacturing process, or even the compilation process, some kind of process, something happens, right? So how can we kind of maintain that not only the code is secure, but the random number generators and the physical devices are secure?
Well, I think first and foremost, security audits are huge, and not just from one party. So it's not enough anymore to just have one organization come in and do a security audit of your systems. I think you need to have two, and of different backgrounds too. So particularly for us, we have someone within the space doing a security audit for us, and then kind of a big old giant that does security audits as well, doing an audit of our entire system. And then in terms of open source and open sourcing whatever you can when you're still able to maintain a proper business, especially for us, any like libraries that we've committed to or that we've added to, we're obviously pushing back to the community, and as much as we can, we plan to open source.
It's such a good question, especially what we're seeing from the Snowden leaks recently is like, oh my God, our hardware is screwed. I mean, it's riddled with issues. It's something that we haven't been looking at. We've been kind of ignoring as we focus on our software security. I would love to see more open hardware initiatives where we can inspect the code and look at the design from the complete stack. But that's going to take some time. I would love to see Bitcoin companies trying to insinuate themselves into that as much as possible. Given if you're starting a company, you have the choice between going with a very open platform and a very closed proprietary one. I would love to see companies making that choice to go with the open version.
Okay, thank you.
Last question.
We've talked a lot about banks, but I live in a country where only the 30% of the population has access to bank accounts. And for me, Bitcoin takes a very important role in the financial inclusion. So I would like to hear a little bit about security and usability for those people who don't have any access to any bank or any financial institution. And also, I want to hear about security in non-smart mobile devices.
Well, so the reason I got into the space to begin with was because I thought that the disruptive power of Bitcoin is greatest in third world countries and emerging markets. And for us, I mean, listen, at the end of the day, our financial system has problems, but it's much better than what other people have to live with on a daily basis. So for me, in most of these countries, people have mobile phones, maybe not smartphones, but they do have mobile devices of some kind. So there are some interesting companies working on the transfer of Bitcoin through SMS, but also from a hardware perspective, obviously biased. I think it would be excellent to be able to get hardware into these, cheap manufactured cell phones that allows that phone to almost kind of be your bank, because there are more people in this world with cell phones than toilets, so everyone's got that. So if we can get that piece of hardware secure enough where it could be your bank, if you are financially unrepresented, that's a win to me.
So, final word, Christoph.
Sorry. So there are a number of initiatives that are going on that I think are important. Hardware wallets like Melanie's that are small and cheap, I think are really important. If we can get cheap hardware wallets out to those people that can talk over the GSM network, which their phones are already doing, would be pretty fantastic. There are cheaper and cheaper smartphones that are getting out there, like Mozilla has been working on like a $25, $30 smartphone, based on Android. That's pretty outstanding. But to be honest, in terms of storing your life savings or something like that, phones are a very difficult place to make that happen. It's very difficult to secure a dumb phone or a smartphone. Privacy is even more difficult to tackle than the security angle. And so I think for people that are using those devices, mostly they're going to remain in terms of the kind of pocket change, everyday kind of transactions. And they're going to need some additional supplemental technology that hasn't quite been rolled out to them to cover, their life savings or accumulating money over time.
All right, thanks to our panel and lots to think about.
Cool. Let's get another round of applause for our panelists. I think we're really lucky to get a super diverse background of super qualified people.
We'll be taking a break until 3:35, so feel free. There's still some food outside. Feel free to, just relax. Do two more talks or almost done? Hi. Jonathan. Yeah, are you? Wait. How old are you? Okay. Yeah, I don't have a list, but Bitcoin not I think is pretty accurate. I know. Oh, are they not? Okay. I thought they. Okay. I know. There's Mexicali in Kendall. There is Veggie Galaxy in Central. There is Moxa, in Central also. Does the Coop take Bitcoin for anything? Oh yeah, the Coop also, our bookstore in Kendall. Okay. Yeah.
You can get like a bunch of crap.
Yeah. So there's some places we should actually put one on a list on our website. That's a good idea. Spend it. Yeah. Yeah. Sorry, mics. But I think we'll put a list on our website. Wait, are you a student? Which? Oh, are you the one that filming? Okay, all right. No, there was another guy from New York that wanted to film or something. Okay, cool. Yeah, how do you like it so far? Oh, okay. The first talk of the day was Charlie V. Just now was the panel on security. Yeah, Jeremy Allaire is coming next. Oh, it should be, but he doesn't. Okay. Yeah, later, man. Also, we need to change the name on the image from Brian Salkis moderating to Dan, and I need to talk to Jing about that. But yeah. No. Wait, is it Jing? Is it good?
Yeah, it's opened up in another tab.
Oh, well, I'm just gonna
What video trim?
the tour to Bitcoin. I need to find out which folder.
It doesn't matter. We can just pull this up, honestly.
Okay. I mean, I just wanted to put it in the folder with the others.
Oh, yeah.
Does Allaire have slides? Oh, he does, right?
He does. It's in the
Hold
folder.
on. Fuck, I need to figure out how to use a Mac.
Here, do you want me to?
Yeah. Wait, can you just go to the other folder because I need to find out where it is? And Allaire's here right now. Okay. Don't open it. Oh, sorry. Yeah, sorry. Okay. Folder. Where's this folder?
It's here.
Okay. No, I mean we need the folder. That folder that this came from.
Oh.
Sorry, that was me.
I don't know where I just pulled it out of.
No, I think you closed. I think the name was
Oops, this is contact info.
Oh, yeah, this is on the screen, by the way. So. Yeah, so. 322. Are the mics on?
Hey, Dan? Dan?
Okay, so Dan.
Can you...
We're trying to change the poster image. But we want to put it in the same folder that all the other stuff
Yeah,
was?
I already put it in there.
Oh.
Sorry, I maybe didn't tell you that I did that. Jeremy is going to plug in his laptop and see.
Oh, did he change his slides?
Yeah.
Okay, well, if he's going to plug it in, can he plug it in like before we start?
Yes.
Okay, cool. God dang it.
Website, and you can add yourself to the newsletter. I send this out weekly.
Oh, you send it? Okay,
Yeah.
okay.
I think it might be right, but
mailing list.
Mailing list. Yeah, you can go to this and put yourself on the
Okay.
mailing list. And I send that out, and I'll put something in which week to week what we're doing.
Okay, yeah. So then it will be, okay. Thank you. Just wanted to comment.
Very cool.
What are you doing? You're a freshman, huh?
Yeah, I'm a freshman. Right. I just joined the club this year and helped put this together. And yeah, we're doing a lot to expand Bitcoin on campus.
Yes. Are you doing anything at Harvard?
Harvard, no.
Why not?
Actually,
Do you want some connection to be made? Or
they, I know they do have. Like, I've met a lot of them actually.
Okay.
And so we have interscholastic Bitcoin meetups where we meet. I've met some of the Harvard folks, like at Harvard Business School.
Oh no, the college.
Oh, the college?
Yeah.
Undergrad?
Undergrad.
College? I don't think I've met anyone there.
You're undergrad here?
Yeah, I'm undergrad.
Yeah, so I think the college also does quite a bit of business. Maybe you should, I don't know, might be useful to collaborate.
Right, yeah. We collaborate with a lot of colleges. Normally, yeah. So I'll send that.
This may just make
Thank you so much.
Yeah.
Oh, yeah.
Does this work? Oh, okay. Hi guys, it's time to come back to your seats. Constance, what's the URL? Time to shimmy back into your seats. There's a quick announcement. Jeremy's going to give a quick announcement, and then I'll intro Allaire. What's the intro? Yeah, okay. I will just speak slow and walk through.
Whose computer is this?
Mine?
You want me to do it then?
It's me.
Did we get
Are people out there back here? All right, we're starting in like 37 seconds. I'll call you on. So we have a quick announcement before our next speaker. Jeremy Rubin of the MIT Bitcoin Project. Please welcome him with a round of applause.
Right. Hi, everyone. This has been really awesome so far. It's been about a year since the last MIT Bitcoin Expo. Really cool to see everything that's happened since then. So what I want to tell you about today is a hackathon that we're putting on that's going to be March 21st and 22nd. It's as a part of a broader workshop at Stanford that we're doing as well. And so what we're focusing on with this hackathon is going to be digital electronic voting, identity and personal data management, new government systems, and political participation. And we're not really doing this as a hackathon in the sense where you go and then make a startup or do something like that. We're focusing on open source technology and putting things out there that are going to be protocol-wise free and open for innovation. And if you're interested in this, we actually have a small application, and it's going to go live on blockchainworkshops.org. Do you want to write it up? So I'm organizing this with Jing and with Constance as well, who's over there, who you heard from earlier. So we have a small application that will go up on Monday on the website there. Definitely fill it out. We'll fly you out, and the top teams that kind of present a white paper of the technology that they're developing or thinking about developing will get $10,000 to develop it further, and also flown out to London early in the summer to further develop and workshop their project. So hopefully we'll see a lot of you here today submitting an application, forming teams, and yeah, that's about it. Hope to see you there. Thanks.
Cool, thanks Jeremy. So if you guys are interested, sounds like a really cool opportunity, and that's the URL to apply. I apologize if it's kind of illegible. Next up, we have the CEO of Circle Internet Financial, Jeremy Allaire, for his keynote speech. Please welcome him with a round of applause.
Thanks and good afternoon. Really excited to be here this year. Just watching sort of how the community at MIT has grown in its interest and engagement with Bitcoin over the past few years has been amazing. I was having conversations a couple of years ago and sort of asking, does anyone know anyone at MIT that's involved at all? So I'm really pleased to be here. You know, a lot of what I want to talk about actually, you know, it's not technical in nature. It's really high-level concepts that I end up having to explain a lot to people in government, people in large financial institutions. So as part of Circle, which is an online service for using money, digital money, Bitcoin, and other currencies as well, we're constantly having to deal with the existing regulations, the existing government, and existing financial institutions. So a lot of what I'm going to sort of talk about is sort of how I would share and explain what this is to that group of people. But I think it's got a lot of lessons for all of us, and hopefully you'll find it valuable. So I think the big theme that I am going to draw on is sort of what are the lessons we can learn from the past 20 years in the development of the commercial internet that can tell us something about Bitcoin and the next 20 years, and the next even 5 to 10 years, and why there's a certain inevitability to what's happening with Bitcoin and what that arc might look like. So that's really the focus here. I think, at a high level, I like to explain that we're experiencing this transformation in the sort of fundamental infrastructure that the world economy uses to store and verify ownership and transfer value. That's really the fundamental innovation. And Bitcoin and sort of all these other projects that are being built here in cryptocurrency are part of that arc. And this is obviously, as we've talked about, not just about payments. Although I'm going to focus a bit on payments today. It's about how ownership and fiduciary trust in general can be managed, and the development of sort of standards for how individuals and entities enter into and interact in this much more digitized world of fiduciary trust. And this, the impact, of course, of this technology disruption, Bitcoin and all the kind of derivative work and work that's happening on Bitcoin itself, I think ultimately has a huge impact, not just on finance, because we focus a lot on finance, but it has a huge impact on the fields of accounting. It has a huge impact on commercial and civil law. I think it will have huge impacts on property rights, insurance, and really any other intermediary industries where these were built on the basis of disconnected proprietary ledgers and human processes for reviewing, verifying essentially analog information. And so all of those fiduciary trust institutions will be impacted by blockchain technology over time. But all of that kind of comes up a level into this idea of the Internet of Value Exchange. And there's sort of the Internet of Information Exchange or information distribution, there's Internet of Communications, and we now are sort of entering this phase of this Internet of Value Exchange. And the first use case that people are really focused on is payments and how do we move money. I think we're going to very quickly get into lots of other use cases. But I think we're in this very similar place, and this is an analogy that lots and lots of people use, and I think with very good reason, which is that we're sort of in that kind of just at the birth of the commercial web phase of digital currency. And we're seeing a similar scale of kind of venture investment, a similar scale of enthusiasm from early adopters and technologists, and a real sense that there's a big transformation coming, but not exactly knowing what that is. But the thing that people find don't really remember readily is that in 1994, there were like 4,000 websites. It was a completely insecure architecture. It was incredibly difficult to use. The standards were really immature. Using HTTP and HTML, they were really a joke. I mean, you could do almost nothing with them. And there's a really deep amount of skepticism, mostly skepticism from entrenched government and commercial and private industry interests, and we'll come back to that skepticism as we think about that, both historically but also the skepticism that we see today around things like Bitcoin. And so there's a lot of similarities. Bitcoin today is not useful for an average person. It's just simply not. It's not safe and easy to use. It's confusing and complicated. It's illiquid, it's volatile, it's got enormous challenges for the average person to use it today, and we should just obviously be honest about that. But so did the web. The web was a terrible technology in 1994. You could do very, very little with it, but we saw that you could do tremendous amounts if we improved the standards, improved the architecture, etc. Now, I think, the sort of what happened over the next 20 years, we all kind of know because we're all living in it today. We had this wholesale transformation in media, in communications, in commerce, and all of that was built on the sort of open protocols that had emerged around the internet at the time. And that work that it took, the sort of technical and architectural effort, the associated capital investments in software, in improving the protocols in hardware and capital expenses, all these things took many years to unfold. And I think likewise we should expect that the whatever 500 million that's been put into Bitcoin-related companies, that really needs to be many, many billions of dollars in associated kind of infrastructure. And that's going to take 5 to 10 years till we really see this starting to get into a kind of single-digit impact on the financial system or the payment system. People forget that online commerce is just like 5% of retail sales today, or that broadcast television accounts for like 96% of video viewing hours, not YouTube and online video, even though it feels like these things have had a big impact. But I think the really important thing, though, and this is critical, is what is it about the technologies and protocols that enabled these global transformations, and how can we compare that and learn from that in what's happening with Bitcoin? I think in many ways, sort of the internet itself has encoded into its architecture a set of ideals, and these ideals are what make so many of the things that we take for granted work. The ideals include things like the internet is a distributed and decentralized network. It's a distributed and decentralized technology. It was originally conceived, as we know, by the Defense Department scientists and computer scientists there as a way to provide greater security by not having a single point of failure in the event of an attack. But that distributed and decentralized architecture allows for things to scale out incredibly well in a very resilient fashion. Anyone can join. The internet, there's no company that sort of says you can join the internet or not. If you have a piece of software on a device that speaks IP, you're on the internet, and you can use the services of the internet. You don't have to ask permission, and that's a really powerful thing. It's one of the deeply democratizing aspects of it. The other thing, and this always surprises people when I say this, no one runs the internet. People are like, what? No one runs the internet? Is that possible? And actually young people find that hard to believe. And even older people who are not close to the internet as an industry don't really understand the fact that it's not governed by a company, any corporation, any specific government, etc. It's a consensus-based environment that evolves in a meritocratic fashion with the evolution of technical protocols and standards, and that's how the internet's run. There's obviously nuance to this, but simplistically speaking, it's not governed by anyone. And so again, the concept of a payment system or a financial system that's not governed by anyone, it's very hard for people to get their heads around. But when they understand that modern society runs on an infrastructure that no one's in control of, people start to get a little bit more comfortable. It's also very much built on the ideas of open and free intellectual property. Fundamentally, this sort of architecture happens because all of the technologies that make it happen are in the public commons. There are public specifications. There's informal and formal standards bodies. There's open source projects that anyone can participate in where that intellectual property is free. And so that creates this enormous public good and this infrastructure that everyone can build on and take for granted of, and there's a kind of hive effect that comes from that. So these are really core ideas, that kind of open, free intellectual property, open source technology. If we didn't have these things, we wouldn't have the internet that we know of today. And then finally, and it ties into some of these, is a pretty deep democratic and liberal ethos that's sort of focused on freedom of expression, focused on personal privacy, creative freedom. Those were sort of founding ideas in I think, many of the designs of the internet, and very much persist today. And I think human society has achieved greater ability to have free expression because of the internet in ways that were never imagined. So all of these ideals of the internet play themselves out and disrupt industries, and that's what's been happening for the last 20 years. And there's obviously commercial ventures and companies that are behind some of the efforts here. It's not just all kind of kumbaya, free everything. There's real activity that's driving it. But these, I believe, are many of the fundamental things that sit inside the internet and all the innovation, and very much are at the foundation of what I think gives Bitcoin the opportunity to be the kind of HTTP of value transfer. A good recent example of the way that open protocols and formats have shaken old models is in media and in television and in video. We're sort of moving gradually from a world where if you wanted to transmit video, you needed to have a license from the FCC, you needed to have closed physical plant cables that you owned and put into neighborhoods, or you had to put fleets of satellites in the sky, and that's how you could distribute video. And that's a very old, closed, centralized, proprietary model for how to move media. Now, TV distribution, of course, has moved to the internet. We're still, as I said, only 4% of viewing time, or 5% of viewing time. Obviously, demographics would show different percentages, but broadly speaking, the vast majority is still in broadcast. But do any of us believe that the sort of march of these open protocols and open IP and the ability to move video into apps on any device isn't going to kind of eventually overtake these closed models? And it seems at this point completely inevitable. Now, what's interesting is, with all of the sort of social and economic advancements, that one set of systems that's been deeply resilient to change in the face of the internet is the global financial system. And specifically the systems that we use to store and secure and verify and transmit value. Now, I think with so much of the human population connected, with powerful computing devices in their hands, it's now possible to really reimagine the underlying infrastructure, not just things happening around the edges, of finance and of value exchange, based on these ideals and based on these internet-centric architectures. So as noted, I think most people don't realize that this model, these sort of elements or DNA of the internet, sit behind so much of the things that we take for granted. When people search the web or communicate via email or have a voice or video call through their phone that's over the internet, they just assume something made that all work. And they assume it's usually kind of closed proprietary systems, but they don't realize how much of that is how much of that change has been in the result of an architecture like what Bitcoin is built on. And so when I typically walk into an environment, an existing financial institution or others, and sort of hear that they hear that there's this new distributed, decentralized, open source, open standards network that no one controls, that allows people to store and transmit money, they give you this really puzzled stare, like, that's not possible. That how could something like that be possible? And that's the first reaction, is to be deeply skeptical. And the response gets a little bit more nuanced, where sort of the explanation is, well, that's not how payment systems and financial systems work. Payment systems, they say, are administered by governments. They're run by centralized private networks like Visa or MasterCard. It's just not feasible for these things to happen over the internet, is the sort of typical response. And then there's a long list of reasons why it's not feasible, typically. And we could get into those. But I think, it's important to remind these skeptics of what we've just seen happen over the past 20 years. We now live in a world where communications globally is free, where media distribution for anyone is free, where voice and video communications, these very rich forms of interaction, and using those globally are free. It's just literally the cost of data. And even something as simple as search is enormously powerful when you think about where we were 20 years ago. The idea that you can, at no cost, sort of search all of human knowledge instantly, on demand, that was very hard for anyone to imagine 20 years ago. And it's important, again, to remind people of these changes that have taken place, and that it's quite possible, in fact, increasingly likely, that the same kinds of changes are going to happen in the financial industry and in these fiduciary trust industries that have built up over time. And I'm sure back in 20 years ago that the U.S. Postal Service or AT&T or the FCC or traditional telephone companies were saying the same thing. It's impossible. You can never do that or do this or do that. And at the time, they were actually right. That's what's so interesting, is that the internet was not useful at that time. But that doesn't mean that innovation and creativity and software creation and those fundamental ideals can't make a huge difference. So I think kind of drilling into a little bit more of kind of what that means, I think we're interested in a world where certain things that are not free today become free. So things that are not free are storing money. In fact, with zero lower bound and negative interest rates, you pay to store money these days. Money transfer, the ability to move value, whether it's between a person or a business. Payments, again, person to person or with a business. All of these things are not free. Sort of value exchange, etc., are not free. And in fact, as we know, there's enormous revenue streams that are built on the existing platforms for making these not free. It's a very, very significant piece. But that, I think, is about to change. And I think that's going to be driven by the integration of existing value transfer and value storage systems with a global value exchange network that should do for money and value what HTTP did for information and data distribution, or what SMS and SMTP and similar protocols have done for communications. There's, of course, kind of many dimensions to the kind of revolutionary potential of the blockchain. I know some of that's been explored a little bit here, but again, I want to focus specifically on one dimension, which is how can we use Bitcoin and the blockchain to make it free to store and use money and move value very, very easily, but in the context of the world that everyone actually lives in today, which is not a world where everyone's being paid their salaries in Bitcoin and Bitcoin has a stable value and every business accepts it, but the actual world that we work in today, and how can we improve that greatly. So a lot of attention, of course, has been placed on sort of Bitcoin as an asset, as something that has value, which it does, and that's critical. And that's, of course, deeply related to, it's fundamental to Bitcoin, the platform and the network. They're inextricably tied together. But I want to talk about, how can Bitcoin specifically disrupt payments and value transfer? What's a way forward for how that could work for the average person in any country in the world? So sort of similar to how HTTP and SMTP connected previously centralized information sources or communications platforms, Bitcoin can connect existing value storage and value transfer systems and connect them into a global digital currency powered value exchange network. That's Bitcoin. But really, conceptually, you can think of it in a model where users could easily and frictionlessly transfer value between local currency and digital currency, dollars and digital, or euro and digital, or whatnot, get the security, privacy, economic efficiency of the Bitcoin network, but still rely on their government-backed banking and currency system. Such a system would obviously need to allow users to store value in whatever currency they felt was most valuable for their needs. If they wanted to store value in dollars, that's fine. If they want to store value in euros, that's fine. If they want to store value in Bitcoin, that's fine. If they want to store value in yuan, that's fine. Storing value in whatever you care to, but using this distributed network to actually perform payments and value transfer and the like. And I think that's exactly what's happening right now. We're seeing all around the world hundreds of startups being built that are providing that connectivity. They're providing that connectivity into existing electronic funds transfer systems, existing payment systems, and as more and more of that gets connected, it becomes possible to drive the effective cost of using money closer and closer to zero over time. And rather than sort of viewing Bitcoin as a threat or a replacement for local currencies, I think within traditional banking, Bitcoin, I think, can be viewed as a powerful optimization that can actually improve the security, improve the privacy, and lower the costs of how value moves. And so again, those that want to hold or trade digital assets as individuals, as institutions, should be able to do that. And we need robust electronic marketplaces for this ultimately to thrive. And so that sort of leads to my kind of final thoughts, which is what's needed other than this basic idea of how do we get connectivity between existing electronic ledgers and this global network. There are a bunch of pieces. So the first is we need to continue to push for regulatory clarity and seek global consistency in these rules. If there's essentially a balkanized set of rules around this, it's going to make it very, very difficult. And hopefully these are minimal rules and they're imposed on companies that only deal with the gateways to fiat and not people who deal with just creating software and who are creating Bitcoin itself and who are creating pure software-based products. We need much more mature, liquid electronic marketplaces for digital assets like Bitcoin that provide liquidity that sits underneath value transfer. That's fundamental. And that's a huge opportunity to serve retail and institutional investors. But without that, you can't get the benefits of moving value instantly and easily through this network. And then we need great consumer apps, apps that change how people experience money. And that fulfill this promise of kind of global, instant, secure, and free payments. And again, there are a lot of people working on that. We're working on that. If you haven't tried our apps, you should grab them and you can get $5. Very exciting. And I think just at a high level, most of the innovation work that's happened around the financial system, what often people call fintech, has really just been around the edges. It's been sort of improving little tweaks here and there. You know, even Apple Pay, it's just a user interface improvement on cards. That's basically all it is. Rather, we should be taking those core ideals, those ideals that have affected so many different industries, and applying those in a deeper, more fundamental way to how value works in the world. And that's what I think Bitcoin is doing. That's why I'm here, and I'm very excited. And thank you. Is there time for questions? No? Yes? Take a few questions, yeah.
Sure. Early in the talk, you were discussing the sort of still early penetration of online video versus TV broadcasts. A lot of the research here at MIT is about combinatorial innovation, how it's the way changes are combined that's often interesting.
Yeah.
So you were saying Bitcoin is kind of at the same early stage as a lot of these other technologies. In what ways do you think they can kind of combine?
Yeah, you know, I mean, what made the internet really interesting was not just HTTP and HTML. It was the fact that, you know, compression techniques in modems were getting better. Personal computers were actually getting to a point where they were useful to the average person. So the growth rate in personal computers was really starting to take off. There had been a build out in the prior 10 years in corporate networks and software for communications using software like email. So there are a lot of things that combine to do that. And I'm a big believer in sort of the mutual reinforcing kind of trends that have an impact. And for, you know, with Bitcoin, I mean, there's so many dimensions to it. I mean, clearly, the kind of deep fault lines that exist within the existing financial system around the lack of identity security, the lack around payment security, those are huge, huge challenges that need to be addressed. I think that the sort of really just in the past, even just couple of years, has the mobile phone actually been viable as a payment instrument in the sense that you can use it, you can tap it, you can use it as a physical payment instrument, and you know, through Bluetooth, NFC, and things like that. So, and the ability to kind of render financial services products in apps on devices like that is really powerful. That didn't exist, you know, in a real serious way even just a few years ago. That's another you know, significant one. You know, and I think the kind of just growing amount of kind of cross-border commerce and globalization, the globalization of labor, the ability for people to, you know, freely collaborate on IP anywhere in the world, and the need to move value associated with that is a fundamental driver. So that's a few of the things, and there's probably a lot more as well. But yeah.
Hi, my question for you.
Can Bitcoins be stolen? I don't know. Huh? No, nothing. Just kidding. No.
My question for you is whether you can connect Bitcoins to the, what's the name? Blockchain, and use blockchain as direct communication between your payment and Bitcoins and blockchain and back. So to say, to escape a third party. Thank you in advance.
Yeah, I mean, it's a basic idea. It's like if I have a mail server and I want to send an email from it to another endpoint on the internet that has a mail server, it'll work. And that's the same with Bitcoin and the blockchain. So if you have a computer that has the software, it can transfer value, and you don't need to have permission, and it works with anyone who's implemented the protocol properly. Cool. Thank you very much.
All right, let's bring it up one more time for Jeremy Allaire. Thank you.
All right, the moderator for our next and final panel is none other than our very own Dan Allaire. He's the co-founder of the MIT Bitcoin Project, also co-founder of the MIT Bitcoin Club, and he's a second-year Sloan student. So please welcome our final panelists to the stage.
Are you standing or sitting?
No, just sit right up there. Okay. See you guys. Okay, thank you. So I'm filling in today for Ryan Selkis, who couldn't be here with us, but we've got a fantastic panel here. I'm going to start off by letting the panelists actually introduce themselves, but we're going to be talking about infrastructure. And so earlier today we talked about the financial infrastructure and kind of the exchanges and trading that are filling in that part of the Bitcoin ecosystem. We also talked about the regulatory infrastructure. And today on this panel we're going to get a little bit more into the technical infrastructure, not the Bitcoin core protocol so much, but what's being built on top of that by companies like BitGo and OneName and Chain. So first I'm going to hand it over to Will. Just take a minute, introduce yourself and what your company is doing to build out the infrastructure.
Great. Thank you, Dan. Hi, everybody. My name is Will O'Brien. I'm the CEO and co-founder of BitGo. We are based in Palo Alto. We're one of the leading providers of security technology and security platform for Bitcoin. We were founded in, started working on multi-sig technologies in 2013. We were the first company to launch a commercial multi-sig wallet in August of 2013. Followed on that with an enterprise institutional web wallet, multi-user wallet in 2014. Followed on that earlier this year with the launch of our platform API, which now powers large exchanges like Bitstamp, large hedge funds like Binary Financial, and many other customers across the ecosystem. We've raised about $14 million in capital, and we're hiring for all those MIT guys here. But it's great to be here. Thanks, Dan.
Hi, my name is Ryan Shea. I'm one of the co-founders of OneName, along with Munib Ali, and we are working on a decentralized identity system on top of the Bitcoin blockchain. So you can register an identity in this decentralized, completely open phone book that's on top of the Namecoin blockchain. And with it, you can be in complete control of your information, so you have write access to your public information, and you have unique read access to your private information. We built this, launched it about a year ago, March 2014, and we have 30,000 users on top of it. You can check it out, sign up at onename.com. And so we draw an analogy to Bitcoin, where with Bitcoin, if you have unique access to your private key, you have control of your funds. Well, with our system, you have unique control over your username and how you represent your information, your identity.
Hello, everybody. My name is Adam Ludwin. I am one of the founders at Chain.com. And first of all, thanks, Dan, for inviting us here today. So Chain.com is a Bitcoin blockchain API. So why do you need an API for Bitcoin? If you think about the evolution of Bitcoin, we had anyone could download the Bitcoin open source software and run a node and participate in the network as a node. But as the protocol and the currency gained more and more interest and traction, really thoughtful software engineers and entrepreneurs thought, well, maybe we can build whole services, applications that run on top of this protocol. And it turns out that there's a lot more work and complexity under the hood if you want to build, say, a remittance service, or you want to build something like what Ryan is building with OneName. And so our service, if you're fond of analogy, is a lot like Twilio or Stripe or Heroku or AWS, in that we provide a sort of cloud infrastructure for a particular technology upon which many applications are built. And a couple examples, if you're familiar with like ChangeTip, which lets you tip over Twitter, they use our API. If you're familiar with BitPesa, which lets you remit money to Kenya into the M-Pesa network, they use our API. I think OneName uses us for part of what they're working on. So we are really focused on helping developers, including people that just have an idea, an individual developer, build with the Bitcoin protocol.
Great, thank you guys. So I'm going to try not to ask a lot of questions. I'd rather have you guys asking each other questions, but I'm going to make sure we keep the conversation going. So feel free to respond to each other. Don't feel the need to turn to me and just give a single answer. First of all, how do you think about what types of developments should be built on top of the core Bitcoin protocol versus what should be handled by, I guess, third-party infrastructure providers like yourselves?
Well, I think there's desire and then reality, right? The blockchain security, i.e. the mining power, is the most powerful computing network in the world that we've ever seen. It is the utmost of security. So the more we could push down to the core would be great. But the reality is that the core is also really, it needs to be protected. And so it moves slowly. Core development moves slowly. There are a few number of core developers in the world. So that's a process problem that we're dealing with. So in a case like BitGo, when we first launched our institutional wallet called BitGo Enterprise, we recognized that there was a need for not just multi-sig, but risk controls like spending limits, velocity limits, whitelisting, multi-user access on top of what the Bitcoin protocol offered. Now, if we could have built those into the Bitcoin core protocol, that would have been excellent, and maybe someday we can. We built those on the BitGo stack, and so we operate a service that provides those controls. And so that, our promise to our customers is that we'll operate that service and that will remain secure and we'll prevent off attacks to our service. But at some point, what can we do that's more blockchain secured? So that's why I'm really excited about projects like Sidechain coming out from Blockstream, and there are a number of other kind of think tanks approaching this question of what can we get down in blockchain security. The more we can put there, the safer the overall ecosystem will be.
Anything to add?
I think it really comes down to what your needs are, what you're trying to achieve, and as Will said, if you're looking for something like multi-sig, you're looking for security that the core protocol doesn't provide or doesn't make it super easy, then something like BitGo could be really useful for. If you're looking for something where you need to a full blockchain where you have so like the typical blockchain, you don't have TX index turned on, so there's certain calls that are not available to you. So if you want like the full range of calls, you either have to turn on TX index and you have to have a blockchain that's like twice as big, or you can use one of the APIs like Chain, for example, to get unspent outputs for private keys that you don't have in your wallet. And then when it comes down to us, if you're building something that requires decentralized identity or decentralized authentication, there's a lot of decentralized applications that would require that. The core Bitcoin protocol just doesn't provide for that. If you're building something like a decentralized voting application, decentralized document signing, whatever, you could really integrate identity and authentication into it in a very simple way if you're using something like an identity protocol on top of the blockchain, which is what we're using.
Does anyone know where Netflix runs their servers?
AWS.
Yeah, Amazon. Hey. They run them on chain.com. No, I'm just kidding. So yeah, Netflix uses tough crowd here today. It's like 4:30, everyone's half asleep. So yeah, Netflix, which is obviously a stellar engineering culture, arguably one of the best in the world. I think revenue per engineer is like higher than Facebook, higher than Google. They choose not to build the entire stack because they know what they're working on and what they're really good at. And I think that this market is going to follow a similar path where you're going to see more and more stratification at different layers in the stack. And there will be people focused on security, people focused on identity, people focused on data, etc. And I think that's just a natural course that a maturing technology takes. There's going to be a lot of competition, people running into each other, people trying to figure out really what they're working on, what they're really doing. But over time, I think, like if you're here and you have an idea for a Bitcoin service, chances are you don't want to build from the ground up the services that BitGo offers, the services that Chain offers, etc. Chances are you just want to build your idea. And what's nice now is that you can just start on it over a weekend or at a hackathon, and you could have something up and running. And that's really powerful. The one thing I'll just add to that is, unlike other cloud infrastructure, Bitcoin, because it's decentralized from the beginning, because that's part of the ethos and that's an important feature of the security of the whole technology, cloud companies like ours have a responsibility to make sure that our services are less like cloud services and more like fog services, where we're sort of, you get the features of the cloud, it feels like the cloud, but it's really pushed down as much as possible, spread out as much as possible. I think that's going to be a way in which Bitcoin will actually change the way people look at cloud in general. And we could say more about that, but I think that's going to be one of the key differences versus, say, Twilio, where you don't really think twice about using them, even though they are, a centralized provider of data.
I just want to pull out one of Adam's comments and emphasize a little more. It doesn't make any sense today to go build your own core platform layer, your own indexer on the blockchain, your own security multi-sig. There are platforms now that are robust, that have been around, that have been hardened, and they're really easy to use. And so a lot of the hacks and thefts that we're seeing, I think of them as kind of legacy of yesterday's startups in the Bitcoin ecosystem that were built. A lot of them were built when the value of Bitcoin was very small. When the value of Bitcoin was 5 cents or even $5, you didn't need to put millions of dollars of security into that. But now now really the stakes are a lot higher. And so I think we're at a point of maturity in the ecosystem now. There was mentioned in the last panel the CCSS standards, BitGo, C4, and other companies like Armory contribute to this. And we put out now a set of standards that says, hey, how do you generate keys? How do you manage those keys? How do you make sure that one person hasn't seen 2 keys in a multi-sig wallet? What do you do for pen testing? What do you do for everything else? It's the checklist. And so if you can go through that checklist and see that you're ticking all those boxes, then you might be able to get an underwriter to insure you. You might be able to, go raise capital easier. And so the ecosystem is going to thrive by going towards specialization, as Adam just alluded to, specialization of AWS versus racking your own web servers, now specialization of platforms in the Bitcoin ecosystem, and standards together. And I think that's a really important message. So you're coming out of an incubator now. I'm a mentor at Boost in San Mateo, California. There are 25 companies. 0 of those companies should be downloading Bitcoin D. They should be running on a platform today.
Great. And there are a lot of companies now who are providing this infrastructure layer. And some of them are some of these larger companies like Coinbase, like Blockchain, that provide a lot of other services in addition to having APIs. If a developer is looking to create a service on top of Bitcoin, how should they think about using one of those kind of large players who do a lot of different things versus using a more specialized tool set like what your companies provide?
I think play with different services and pick the best one, basically. No one. I think the reason we started Chain, even as we saw other people offering APIs, for example, is because, as we all know from domains outside of Bitcoin, focus and specialization actually count for a lot. And in the Bitcoin space, there's a real. We felt at Chain that developer experience was not on par with what you got in with other type of tooling outside of Bitcoin. And we thought if we really focus on developer experience and go deep there, that, and by the way, in addition to that, focus on reliability and sort of infrastructure as a core of what we're doing, it's unlikely that other companies will be as successful and create a product that's as good, right? So I think it's really a question of focus, and that so far has borne out. But yeah, there's going to, like I said in my earlier comments, there's going to be a lot of competition. A lot of people are going to sort of try to attract people like those of you in the audience who have ideas. Everyone's going to say, oh, build on our platform. It's the best, right? Well, go play around with them and ask people who actually use these different platforms, are they any good? And I think that's the only fair answer. We could all talk our book, but that's the only fair answer.
Did you want to add anything to that? Yeah, I think that makes a lot of sense. A lot of what we're doing as companies in this ecosystem that are providing infrastructure is we're evangelizing both Bitcoin and then the best practices about how to build your apps, how to build your businesses on Bitcoin. So there are a ton of meetups, there are developer, DevCore conferences, where you can actually just get into code. There needs to be this flywheel effect, where I think the ideas are not going to come, the best ideas in Bitcoin are not going to come from the 13 companies that have raised 10 million or more in venture financing. It's going to come from the thousands and thousands of global entrepreneurs applying Bitcoin to their local needs and solving their local problems, regional problems. And so, if we can have more of that growth where you can get up and running. Somewhere in the audience, Ben Chan is a developer, works at BitGo. He's going to be presenting tomorrow about how to implement multi-sig in 5 minutes, right? That's the top of his talk. So get involved with any of the platform that's suitable for you and try it out, because I think that's how you're going to get going. One of the things we added to our platform in the last week, we announced that we've taken on an insurance policy from a global A-rated insurer. And I think there is still kind of a fear of using somebody else's platform, and so we've actually offered now that the first $250,000 of value is covered for all of our paying customers. So if BitGo ends up having a problem and there's a loss, that'll be covered for our customers. So we're trying to find, and I think other companies are trying to find, make that flywheel effect, make that easier on ramp, so you can get started. It doesn't cost a lot of money. You have security. You have comfort in using a platform.
So for how many of you guys do you have customers who are doing things with Bitcoin other than as a payments or currency use? Are you seeing any of these kind of 2.0 or token-based use cases?
Yes, absolutely. The first use cases we saw were actually payment uses. So really early use case was you have a username to Bitcoin address mapping, so Bitcoin wallets could integrate our SDK or API, and all they need to do is a user would have to type in a username instead of a Bitcoin address. It would autocomplete to the Bitcoin address. So you can see a couple different wallets that are around today that have this. Rush Wallet is one of them. Bitcoin Authenticator is another. I think there's about like half a dozen or so. There's that. There's also people who are building reputation on top of OpenName. There's been a few people who have experimented with decentralized voting, decentralized document signing, where it's not just a Bitcoin address that has signed the document or some other type of public-private key pair, but it's an actual person who has an association to that Bitcoin address. So yeah, we've seen a lot of people who have came to us who have actually started building things, and also you can check out if you go to openname.org, you can see a list of companies that have built on top of the OpenName decentralized identity protocol.
So about 20% of the volume on chain is non-financial. So and a couple of them are big use cases.
How do you quantify volume? You mean transaction volume?
Just
API usage?
Yeah, API usage, registered notifications, that sort of thing. Depending on the metric, it's around 20% or about a fifth. And to give you a couple of examples, without naming specific companies, there are people that are there are telecom companies that are using the blockchain, exploring using the blockchain to move prepaid minutes between networks. There are companies that are exploring how to put membership rewards, points, frequent flyer miles, et cetera, on the blockchain. There are people that are working on ways to use the op return function to have a verifiable audit trail of documents. So these types of use cases are real. They work today. They're as secure as a Bitcoin payment or transaction. And interestingly, a lot of what we're seeing is that unlike other areas of technology, Bitcoin in certain ways favors large companies, the ones that are thoughtful enough to move quickly. Because, not to say that there's, the startups are doing the bulk of the interesting work today, but large companies also have this interesting advantage where they have a regulatory framework already in relationships. They have big balance sheets to take on, to manage risk. And a lot of them have thought very carefully about creating sort of systems of value. So we're seeing, especially larger companies, doing more things that are, I guess you would say, non-financial in nature.
Did you? We definitely have some use cases as well. I think because we come from an origin of focus on security, much of our attention is paid to going around the existing ecosystem and trying to secure now the major exchanges, Bitstamp being one. We have upwards of 30 exchanges now building on us. We have the major hedge funds like Binary Financial, the major miners like Bitfury, others, just helping them get out of the security business and rely on the best practices. So we're excited about 2.0 ideas, and we're seeing those come out of some of the incubators and other ideas. But also we want to get what's out there working. We want to get it right. We need to stop the hacking, stop the loss, and move forward. And then we'll have a good foundation, a good ecosystem, a good platform on which all these 2.0 ideas can thrive.
So speaking about these 2.0 ideas, Joi Ito earlier today spoke about kind of where we are in terms of the development of the protocol and how there's a stage in which you want people experimenting and creating different versions of things, and then there's a point where you want to start pruning back and getting people to focus around a single protocol. Where do you think we are today in terms of the capabilities that are being built out through things like Ethereum or Ripple or these other alternative currencies and platforms? Do you think this is still helpful for the ecosystem to be exploring these different branches of this idea, or is it time to coalesce around Bitcoin, possibly through the use of things like sidechains?
I think it's helpful. Some of those cases that you mentioned are helpful. I think Ethereum is helpful. I think it's a really exciting project. Sidechains is a really exciting project. I'm less excited about altcoins because I think Bitcoin has all the merits to become the universal money supply, and so having competing currencies doesn't really work within the model as I look at it. But I do like the idea of annotating the financial engine, the financial transactions. So I think that's all great. A lot of the altcoins are good experiment labs, good ways to try out higher transaction volumes, different, faster confirmation times, these kind of things, and test, does that really solve the problem, and should that be incorporated into the core, caveat that, the core is slow and hard to move. So we'll see how it all shakes out, but I think some of the ones that are revolutionary, not just evolutionary in nature, are the ones that are worth supporting.
Would you agree with that?
I think Notorious B.I.G. said it best. He said, "Mo money, mo problems." And I just wanted to say that. It wasn't really tied to anything you said. No. What I mean by that is there's a lot of frenzy, and activity, and people rushing in and trying to find the next best thing, and and a lot of it is driven by incredibly thoughtful engineering and mathematics and research, but a lot of it, unfortunately, is also driven by just excitement that you may hit on something and be quick sort of millionaire around it, because a lot of people that did happen to them. So it's difficult, as an observer, if you're sort of new to the field, it's hard to differentiate at first between what is the really interesting research that's happening that's going to actually lead to profound changes at the level of infrastructure, and what are the things that are just distraction. And I'm not going to, parse that for you here, but I think you just have to be very critical when you look at these new projects, and come to your own conclusions. I will just say one other point, which Will's mentioned at other conferences. We've been on 50 panels together, so we know each other's lines at this point. What percentage of transactions are multi-sig today?
8.5%.
8.5%. So there's a long runway of things that already exist that are great technologies in the protocol that just aren't being really used yet. So even before we get to what's the next greatest, best thing, just fully taking advantage of the Bitcoin protocol today and the BIPs that are there, getting them, a lot of those through the Bitcoin improvement proposals, getting those put into the protocol, the work Gavin is doing to scale the chain. That's really what the next few years is about. The rest, I think, is super interesting and important, but is further out in terms of impact.
Yeah, I think I agree with both of them. I think it's healthy to have experimentation, but at the same time, when anytime a developer or company is about to build on top of a blockchain, they should keep in mind and consider that they should value the strength of the network, the security. They should value the how much the network has been built out, how many APIs and services and libraries are available for it, and so that just kind of leads to this consolidation on the strongest and largest blockchain, or if there's 2 or 3 blockchains. But I think at the moment it's very clear that it's Bitcoin, and so I think it's good to consider other things as well. But at the same time, just come back home and think about, well, what blockchain should I be building on top of? We actually a couple of weeks ago released this thing called Blockstore, which is a decentralized key value store on top of the Bitcoin blockchain. And it has a lot of similarities to Namecoin. Namecoin is also a decentralized key value store. But one thing that we kind of wanted to show and experiment with was the fact that you could really build any type of simulated blockchain on top of the Bitcoin blockchain using op return and using just the blockchain as for timestamping and for a sequence of events. And then you can have very little logic in the blockchain itself, and then have the clients be logic heavy and interpret the sequence of events. So a lot of things that you could conceivably use, like build as an altcoin, you could just build vertically on top of Bitcoin, similar to what Counterparty is doing. And so we took a very similar approach to that. And then there's another option. There's like side chains, and there's other things that you can do with it. But I do think that being able to use the Bitcoin currency so that you don't have to speak different languages from everyone else, and also being able to use Bitcoin Core is very valuable.
And have any of you guys actually built into your APIs the ability to work with any of these other currencies or protocols at this point?
So we often get approached by projects asking us, will you support our project, our currency in your API? And I always say the same thing to every single one of them, which is yes, as soon as you give me 3 people who will use it. If you can give me 3 names and email addresses or phone numbers of customers that will become chain customers once we integrate your thing, then we'll do it. Like we will apply engineering time and effort to doing it. Just 3. And no one's ever done that. Like I've said that to every 5 or 6 different projects, and it's all the conversation's always stopped there. So by way of just practicality, we haven't included any other protocols except for Bitcoin. I think that will change. Like I'm fairly certain that 5 years from now there will be more extensions, and there is a race happening right now to sort of make it more generally applicable. Things like Counterparty, things like sidechains, Ethereum, and so on. But it's just too early to see the real world use cases of people, enterprises, even startups that want to use them.
We don't support altcoins today, but we are looking at some of these other projects. BitGo was built in the sense as a horizontal player that as new advancements in crypto come out, we can very quickly add those to our portfolio. And I think Adam has one measure about number of users of those features. Our measure is more about market cap and demand. And so you look at the market cap in altcoins, or you look at the demand. And just look at the demand of Bitcoin right now. My estimates are that there's less than 10 million people that even have any Bitcoin holdings whatsoever, and it's probably less than that. And about half the Bitcoin is held by less than 300 people, likely. So when you look at just the ability to use Bitcoin effectively across creative use cases, it's still on the come. The killer use case right now is some of the trading activities, moving soon to the options markets and derivatives markets, moving into the remittance markets, but those are all financial oriented in nature. So when we get to replacing legal systems and real estate systems and other kinds of things, we'll be ready to get there very quickly, because the core native P2SH carry over, the BitGo stack carries over. As of yet, nothing has really hit that mark.
Okay, great. I want to open it up to the audience. Do you guys have any questions you'd like to ask the panel? Please come to the mics.
Hi. So this is kind of just, I guess, a question about the nature of the blockchain. My understanding is that one of the things that makes the blockchain work is the financial incentive for the Bitcoin miners, so both in terms of generating bitcoins and any sort of transaction fees. So I'm trying to understand how that works for non-currency uses and applications of the blockchain, because I understand it's like a decentralized database, but how do you use that database if there's no financial transaction or fee being generated?
And briefly, you don't. Like, if everything just went to using Satoshis as packets to move data around, you wouldn't have a viable network. So you're always going to have, I think, two halves. The sort of financial half, which includes speculators and store value, et cetera, and then the application half. And the speculation and financial half provides the liquidity of the application half, and the application half provides the demand. But we're going to have to have both, to your point, because unless it's all just fee driven, in which case, it's hard to tell today. But I think it's unlikely that if Bitcoin goes away as a financial instrument completely, it's unlikely you're going to have a viable, expensive, decentralized database that's just available to the world.
So how does that work in a specific context like identity, where you're using the blockchain to store identity, but I'm assuming there's no transaction around that, so how do you get access to that database?
So think of it this way. So as you mentioned, the security of the network comes from the fact that mining power is decentralized, it's distributed, and no single entity has the ability to dictate what blocks get added onto the chain. Once you've established that, you can put anything inside of those blocks. So typically you put a transaction inside of the blocks, but inside of one of those transactions you can put raw data. And so that's exactly what we're doing. So by putting raw data inside of some of these transactions, and assuming that the blockchain is stable and the sequence of blocks and the contents of those blocks has already been confirmed by the network, if you can establish that, then you know that there's a defined sequence of data that hasn't been embedded. And so think of them as like operations. So I claim a name before you claim a name. And because I was able to put this data in this particular block, and you can look back and say, wow, oh yes, he did in fact claim that name at that block. And then you try to do it in a future block, then you won't be able to, because the software that is interpreting the sequence of data will not allow you to register that name.
But in other words, you're paying a nickel to put your name on a global ledger that can't be changed.
So you're still paying for that, because that's what I'm asking.
Yeah, you're doing a nominal transaction that has metadata inside it.
Oh, okay. So when you're doing that identity, there's because my understanding is that there's a miner who's encoding that non-currency data in the blockchain.
You're correct.
Where's the money coming from?
Fee.
Yes, just a mining fee. It's like the normal transaction.
Okay.
It just has a slight modification that you're embedding data inside of the transaction.
So
yeah, we can answer further questions on this offline. Let's go to the other question. Thanks.
One of the things for the health of the Bitcoin network is many participants are running full nodes. Along with mining power, you also need lots of full nodes doing full verification of the blockchain. If most people, who are not end consumers who are going to be running SPV nodes, if most people are going to be using, technical APIs like you guys provide, how do you see the balance of people running full nodes? Is that a problem?
So really what you need is more importantly than individual nodes that aren't mining, you need more decentralization around mining nodes. So APIs don't have any impact on the number of mining nodes that are running or miners that are running on the network. Having said that, to take Chain as an example, I don't think we've said this publicly before, but we run like dozens and dozens of nodes around the world. It's part of what gives us a really unique view into the network. So we're contributing to sort of the number of nodes that are part of the network. And even as more and more services have been built with APIs, like the number of nodes has been increasing over the last, I think, year. There was a drop-off for sure when like a bunch of people turned their laptops off to stop mining, but it's coming back again. So I don't really think that we have too much concentration around nodes. Happy to like hear an alternative argument, but our service and other APIs really rely on the health of the overall ecosystem. So I think if we ever got to the point where we felt that there was a problem, it would be a pretty inexpensive problem to solve, to try to seed far more nodes at universities and research institutions, et cetera, to really keep the health of the network very high.
It's also there's a benefit in being an on-blockchain API, like both of our companies are, that all transactions are independently verifiable from other sources, and in the entire transaction history. So, if there was a problem with one provider's indexer or the transaction creation, what have you, you could still kind of independently verify what's going on. But I think I agree with Adam that it's the distribution of mining that's important, not so much the nodes that are on the application layer sending and receiving transactions.
I would say that I do somewhat agree with you guys. I do think that that it is most important for there to be decentralized mining nodes, but it is also very important for there to be decentralization of full nodes as well, just because for propagating transactions and things like that. There have been proposals for people thinking about ways to incentivize nodes. I don't know if there's any answers yet, but there are people thinking about it.
Over here.
Hey, so my question for you guys is, since you guys are putting, like naming schemes and stuff into the blockchain, what do you think about people hiding arbitrary data in the blockchain? So one of the examples is people put illegal primes, which are like by definition like large numbers that can be decoded to give you pieces of data that are illegal to possess in certain countries. So in effect, what you have is thousands of people possessing illegal data just because someone put it in there.
Yeah, I mean, we've looked at some of these cases. There's always going to be jerks, in any ecosystem. And there's a couple other funny cases. I don't know if I've shared some of these with you that we found. But there are people who are just, spamming and creating problems. And we don't know if there's malintent or they're having jollies or what they're doing. But I think it kind of speaks to, and I don't want to turn this to a regulation discussion because there was one before, that we need to address these problems with an open mind and say, the regulation that applies there, that trips that wire is not the fault of that end user. So what do we do about that, right? We can't just take the old regulation hammer and slam it down and say, okay, now, that rule number 76 to B, C applies here. And so we have to think about those problems constructively and creatively, like what happened, the development of the internet and mobile computing and, location-based services and other things. Those rules need to be rethought. So I think part of being a platform provider is figuring out how to solve some of those problems for your customers, keeping them out of harm's way, and being clear and transparent about how we and then our customers will follow applicable laws. But these are challenges, and we're going to be surprised by some of these things we see.
Thanks.
So it seems like every week there's a new data breach of people's personal information. For example, Anthem, the insurance company, recently said that they were considering encrypting user data, so they hadn't actually encrypted it, which to me is insane. But my question for the panel is, how can Bitcoin's technology be used to render this kind of thing obsolete?
To render what exactly obsolete?
Data breaches of personal identifiable information.
Data breaches, security.
Yeah, so I don't have a personal credit card right now because I was part of the Home Depot breach, and I just got called yesterday that I bought an incredible number of things in Texas and Pennsylvania. So, Home Depot is not capable of keeping my identity data and my financial data safe. I don't care about PCI compliance and all these other things in terms of that. Even if they live up to that measure, they're not good at it. So I do think that there's a future, and I think if you look at what Ryan's doing and what Ab and my company, what we're looking at is, I think there's a future where we split apart financial data from identity data. If I go to transact in a merchant, they don't need to know who I am, they don't need to know my home address, they don't need to know my social security number. They just need to know through a cryptographic process that I am who I am and that I have the right to apply this financial transaction. And then they need to receive payment through a payment process like Bitcoin, where it's one address to another address, and they don't need to know, who I am. So I think if we kind of break apart this data that is all in these honeypots, and we use blockchain technology to give that merchant or give the financial intermediary confidence that I am who I am and I have the right to do this, we're going to solve an incredibly valuable problem that's facing the developed world right now.
Yeah, I completely agree with everything Will said, and I think a big part of the answer is decentralizing data access, bringing it to the clients, putting users in control of their data, putting users both in control of the right to access for their public data, but also how they distribute their private information. So you, for example, instead of a company storing information on their servers on behalf of a user, we can move to a model where the data is stored on the user's device or somewhere in the cloud that's being managed securely on behalf of the user. And then whenever the company needs to access the data, it can either be released through an authentication process in one-time use, or the company could have continued API access to retrieve the data whenever it wants. So, for example, a company could have permissions to have your social security number, but they never have to actually store the social security number on their servers. So if anything ever happens, they can just cut off the access, and then there's no very, very low consequences of such a breach. So we really started off as we were building our protocol with decentralizing identity, decentralizing and associating public data with identities. But one of the things that we really care about and we want to move into soon is also the private data and how we manage the release of it to applications so that these companies don't have to worry as much about data breaches, or there's a much lower cost of a data breach happening.
Last point on that is, and I totally agree with my colleagues up here, why are there data breaches in the first place? Because companies are storing information. Why are they storing information? Because the existing digital financial architecture is a pull model where you have Elizabeth's information, you have her credit card number, she has an account balance, right? Well, you probably don't, but someone you know. And you say, okay, I want to buy this thing, and then they say, okay, well, we have your information, so for convenience, right, when you're in your Uber, like, it's way more convenient to just bill your credit card than to take out cash, right? That's like a real reason that I think a lot of people like Uber. So, but with Bitcoin, it's the inverse. It's a push model. So when you're ready to pay, you authenticate. You use your private key where you control funds on the network, and you say, okay, you can take the amount of money that is due to you, and you're pushing. So you basically, with Bitcoin, theoretically, are in a world where you push value, and therefore you never have to store value anywhere other than in sort of the safekeeping of the services you choose to use. So hopefully over time that will start to take effect and eliminate some of these problems.
Do you have some net?
Well, I was just going to say, we all have a nice vision, but it's not easy, right? So let's not kid ourselves that the incumbents
Wait, what?
are going to do this.
Will?
Yeah.
Okay, go ahead.
It's not going to happen from the major financial incumbents. I mean, half of my banks don't have two-factor authentication. They don't even know what that is. There is a real innovator's dilemma, and I think the blockchain technology, Bitcoin, is going to be obviously disruptive. We need to go disrupt the incumbents and then have them embrace profit models rather than just cost-saving models, and then that's going to lead into internalization of these technologies. So I think we got to make the case for why blockchain should be adopted, why Bitcoin should be adopted.
Thanks. Samir?
Thanks. So BitGo's insurance policy with Excel seems pretty unique and groundbreaking and important in terms of removing some of the risk and bringing in perhaps some more risk-averse customers into the market. So I was just curious how that's been playing out.
Okay, great. Thanks for the plug. You'll get your Bitcoin later.
Please.
Yeah. So for background, for those of you who don't know, we announced that we secured a comprehensive insurance policy from Excel Group, which is a global A-rated insurer, and this is comprehensive cyber, professional liability, crime, and so forth. So we took on that insurance policy because we really believe in what we're doing, and Excel vetted multi-sig, vetted BitGo, and decided to offer this to us. Now, the way that ends up manifesting itself with our customers is if you become a customer of BitGo, automatically your company is provided a promise from BitGo that's worth up to $250,000 safety against loss or theft, and you can opt into additional protections beyond that. So the way it's playing out is that we're seeing large customers, regulated customers, customers who have auditors, fund administrators, and so forth, saying this is the missing peace of mind. You know, to bridge from Bitcoin, it's very exciting, but every week I read about a breach. How do I know I trust BitGo, but how do I know that I really can? So this is kind of that last mile peace of mind. And then on the kind of startup front, you know, the new companies coming in, they know they don't have to put their balance sheet at risk, right? The companies that raise $250,000 actually have a promise from BitGo for $250,000. So it's playing out really well. I'm really hopeful that this is kind of a watershed moment for the insurance industry, that other underwriters will come in and take subsequent steps, reduce the price and the cost of insurance, and keep driving that down, making them more competitive. There are companies out there like Circle that have done this for their own holdings in the back end, and that's a great step. But you know, companies like Circle and BitGo, we have the capability to do that. So we need to make insurance more available to the rest of the ecosystem, you know, either through promises like a BitGo or through underwriters coming in. We worked with brought in the former chief underwriting officer from AIG, worked with him for the last year to structure this deal, and it just announced it. But you know, that's not something that every company can do. I think this is kind of like the early days of cyber insurance. It was really scary, really hard to quantify that risk, and now we're going to move into a space where Bitcoin can be insured, and I'm excited about that.
Thanks.
Thanks. Sorry, we are at time. Yeah, so let's just give a quick round of applause for our panelists. Thank you guys for being here. And I think Jing and Jonathan have a final message for you to wrap up the day and tell you what's coming up tomorrow.
Cool. Thank you all so much. That was super awesome.
Yeah, so we'd just like to reminder again, we're starting tomorrow at 10 a.m. with a more technical focus talk. So things like, reception at 9 with breakfast, and focusing on things like sidechains, zero knowledge proofs, and the more technical aspects of cryptocurrency.
Just if this is not super corny, if the speakers and sponsor representatives could all stand up, and if we could just do one last round of applause for them. Thank you guys so much. Woo! So there's sort of a receptionist thing now in the hallway because there's some leftover food. And if the volunteers and members of the MIT Bitcoin Club could stand up, if you guys want to talk to us about what we're working on, feel free to find us in the hallway. Thank you so much, and come back for tomorrow.
Cool. We'll mention the sponsors, I guess, tomorrow then.
Yeah, I guess.
Yeah, whatever. Hi. Jonathan?
I'm showing like the 18,000.
Yeah, no, it's fine. This is a Pebble watch. These two are sensors for Media Lab sleep study. I just have to wear them all the time.
All the time.
Yeah, so this one has a light sensor.